CL short validated. CL short
There
validated.
he is, nick of time.
How's it going? Oh my, hold on. This is my first big webinar with Zoom, and it's not user friendly. I can tell you that. So I'm not just trying to research how to make you presenter.
I think you've got to make me a host or a co-panelist or something like that, and then you can make me a presenter.
Yeah, it's there. When my camera's not working.
Let's see. All right, you made me a co-host. I think I can present now. Let me see. Maybe, maybe not. Let's see.
So I want to be able. You should be able to present, but I want the users to be able to see both screens too. So that's
Okay. Okay. Yeah. I don't know how to do that.
yeah, no, it should do it. But let me start my camera here. See my screen or no?
Yeah, I see your screen. You want me to try and share mine?
Yeah, try sharing yours to see what it looks like.
All right, let's see if it'll let me share mine. But that zaps yours, right?
Um, I'm not the one to ask. Someone else should be able to tell us they can see both. I mean, if we got to switch back and forth, it is.
Yeah, and that's not gonna be a problem, I don't think. So do you guys see just my screen now? One's a ES, one's an NQ,
Yeah,
Quant
let's see
Tower.
both screens.
Okay, do you also see Scott's screen? The book map. You can toggle to Scott's. Okay.
I guess that's better than nothing. Again, I've never used this one. I just started using Zoom as it is, and it's a pain in the ass. There's just 80,000 options on it, and I've never shared
Well,
it.
yeah, I've been using it for years and years and years, but I use it in a very simple manner. I just, I don't use it like this. I don't know how to use it like this. And like you say, trying to figure it out, you just have to figure it out by trying to do it, So
Um, share one more time on Twitter that we're having this webinar. So if you want to just do your normal, go over the markets just like you normally present in the morning, because I want to watch it again too. I haven't seen it in a long time. So for you guys that don't know, Tom was one of my first mentors. When I got into the real trading world versus, I don't know if you know my story, but I used to be a very large scalper back in the day, for even the S&P, basically flipping the order book, spoofing, playing games all day long. Right back then, spoofing was legal. I mean, at the time when I was making, this just shows you that the simpler you make your trading, the better you can do. Right. So back then, I was just trading off of this. My drawing tool going here, just trading off of the depth of market. Right. I didn't even have. Of course, this drawing tool is not working. I didn't even have charts up at the time. So that shows you, I just was completely ordered. One second, guys. I'm going to try to restart this drawing tool because it's going to be.
Scott, I don't think a lot of people, unfortunately, can appreciate or understand what you were doing. But it was, it was just, You couldn't do it now, obviously, because things have changed so much.
Well,
But
yeah, if I could do it now, I
what's
trust me, I'd
what's
be doing
got
it. If I could do it now,
no,
I'd be doing it. Trust me.
right?
Um,
No, well, you're effectively using bookmap to try to get some of the same information, and that's one of the things I want to get into. By the way, I am making a cup of coffee here. My timer's going off. I'll be right back.
okay, no problem. I gotta try to set this drawing tool up anyway. Shut up one more.
Okay, I'm back. Uh, no, you know, and I try to tell people when I send out this thing talking about doing this with you, you have such an extraordinary story. It's just amazing. I mean, it's one of the most amazing. I've been trading for 41 plus years, and your story is maybe the best of all the trading stories. I mean, I have all the wounds and I've made and lost millions of dollars in a short period of time, but I can't touch the shit that you've done, Scott.
Well, it didn't start out great. I mean, for those of you that are new to me or new to my story, I started out, with basically nothing. I mean, I grew up pretty, I would say poor. We were middle class, but it's not like I, had money to trade. And I worked at the board of trade. I got out of college. I was going to be a financial advisor, and that was way too boring for me. So then my buddy got me a job at the Chicago Board of Trade. So I was working down there as an ARB clerk, the most stressful job you can ever have. I was working in the bond pit. Eventually, I started out, making $200 a week as a runner, and then I worked my way up into the bond pit, working for a broker, getting orders, flashed at me from the big houses. And it was, again, if you make one mistake, you blow your broker out, right? So and I was colorblind and pretty blind too. So it was very, 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 very stressful trying to pick up their hand signals, and they tried to be all cool with the way they would flash it in and stuff. It was brutal. Anyway, it got me battle tested though. So then a guy from the Board of Trade started his own trading firm. This is right when the stuff started to go electronic, 2001, called King Street Trading. And my buddy got me a job there after begging him for months to get me in there. And I started there, and my very first day, and Tom can understand this, so anyone can understand it, but I lost $2,500 my first day, and the most we were supposed to lose was 2,000. So I was almost going to get fired the very first day because I went over the loss limit. They didn't even have anything in place back then to like stop you or anything because it was just brand new. But anyway, I lost $2,500 my first day trading one lots. And that wasn't even holding on to it. That was in and out with one lot. So you can imagine at $12.50 in and out with a one lot, how many times you have to lose $2,500. So that was my first day. So it was an auspicious beginning. And then then I lost, money every day for my first 2 months of trading. Like every single day. I didn't have one day that I made money. And then so I was about to get fired there as well. I'm just setting on my charts while we're talking. But so I was about to get fired as well from that. And then 9/11 happened, and they closed down the markets for a week. I don't know if you remember that time. I'm sure you remember it. But
Absolutely. I was trading all the way through it. I had a big gold position on,
I was
and
actually
gold stopped
short.
trading.
Yeah, I was short too. I mean, I was tiny, but I had a couple lots on. I'm like, what is going on here? My firm, someone was screaming throughout my firm. By the way, I didn't mean, do you remember 9/11? Of course you remember 9/11. I was asking if you remember, when they closed the markets.
No,
But anyway, someone's
well,
screaming in the office, a Cessna just hit the World Trade Center. And I'm like, what? And the market starts to, just, tumble down. And then like 10 minutes later, the same guy's like, another Cessna hit the other trade center. I'm like, okay, this is not, first of all, it's probably not Cessna's. Second of all, it's probably not, by accident. Now, it did take a rocket science to figure that out. So anyway, they traded a little bit longer. The market was just literally air pockets straight down. I can't remember how much it broke at the time, but it was huge. And then they just closed like on the spot before the actual even NYSE opened. Then they shut it down for a week. So anyway, I was about to get fired. I had to try to figure something out, and I didn't want to just sit around for a week, wait for the markets to open. So I started trading the German DAX overnight just to see if I could figure something out. Right. So I started to pick up some patterns there with the order flow and the order book and the first in, first out game that, when you get filled in the order book, depending on where you are in the queue. And then when the markets opened back up, I started to apply what I learned in the DAX and even the S&P, and like it was like overnight, it clicked, and I'm like, okay, I got it, right? So then I started to literally like, play the order book game, and then I took off. So I literally went from being fired to went into my boss's office. So this was now January 2002. I went in there and I bet him that I would be the number one trader for 2002. And the year before, the guy's name was the Big Cheese, and he had made 2.8 million bucks. So this is me about to get fired. Hadn't made basically any money. I just started making money when I went and made the bet. Like little money, like not much. I was making 500, 1,000 a day. Again, not much relative to trading terms, especially to go in there and have the balls to say I was going to be the number one trader. So anyway, made the bet with me. I did it. 2002, I made 2.4 million. 2003, then I really took hold, and that's when I began. I was averaging 50,000 round turns a day in the mini S&P. That's how active I was in the order book. And back then that was 10% of the world volume. Basically, they were averaging about 500,000 a day. So that's how much order flow I've seen in my life. That year I made 10 million. Next year I made like 1.8 million. But that's with two $800,000 losing days in 2004, and then 2005 it just basically started to dry up, and then overnight I couldn't make any money. And no one can make money, right? That's when the algo started to take over, and my firm went from like 75 traders down to 13, and then I parted ways with them because they were just like a normal trader, right? Like when you start to lose, you start to trade scared and afraid to put trades on. So it's like I had a loss limit of, it was supposed to be 100 grand. And as everyone started losing, then they started calling me when I was down like 20 grand, and they'd be calling me, telling me I had to stop. And it was insulting, right? Because I had made them, I made my firm $15 million in 3 years' time. That I split with them, but I still made them. They made a lot of money off me, and for them to be like putting the collar on me, it pissed me off. So it was like we came to a mutual understanding that I was going to leave, and then I left and I tried to trade on my own. And anybody that knows that when you have to make money trading, it's very, very difficult. It's probably not going to happen if you have to make money trading, meaning to support your family. So even though I had a decent nest egg at that time to trade, it was just a different mindset. And when you're trading stressed out, and it just doesn't work. So I spent another 7, 8 years, trying to figure out something that worked and made me even adequate, not elite, just adequate. And I couldn't do it. So I had to leave the business. And then fast forward to 2018, I went into medical sales. So I always tell the story like I'm sitting there in doctors' offices, going in and kissing their ass, and then treating me like a peon, sales guy. Little did they know that I probably made more money in the 3 years than they'll ever see in their lifetime, but I had to sit there and swallow it. So talk about, swallowing your pride and and being humbled, right? So I basically seen it all, done it all, as far as going through the ringer. But anyway, fast forward to 2018-ish, Dr. Brett Steenbarger, he's one of the top trading psychologists, if not the top in the world now. He had worked at my firm when I was making all the money when he wrote his book, one of his books, Enhancing Trader Performance, and he put me in, and he asked if he could sit behind me to see how I traded. So anyway, he calls me and tells me about this platform, bookmap, and he's like, "This reminds me when I sat behind you how you used to trade, how you used to visualize the market." And as soon as I saw bookmap, I'm like, I'm back, right? So anyway, this shows you order flow. We're going to show all this stuff. That the main thing I'm looking at is the stop iceberg information, the most powerful thing I've ever seen edge-wise in my trading career. So anyway, back when I was at my end of my rope, it wasn't quite at the end. It was right when I was trying to figure out a new method of trading, because the scalping wasn't working anymore, because the algos, it was one of the fastest clickers in the world, but I wasn't as fast as a computer. So I couldn't do that anymore. So one of the first mentors I had was Tom, right? I started training under Tom. I think it was like 2000, I want to say 2008, 2009, one of the guys at this other firm that I had gone to try to figure something out. His name was Matt Burns. I don't know if you remember him. I haven't talked to him in a long time. You remember that?
Matt and I are still really good friends. We text back and forth almost every day.
Yeah, so let him know that we should have told him you're doing this webinar with me.
He knows. He texts. He gets my stuff. So
Okay.
He saw that we're doing this, and he says, "How long have you known Scott Pulcini?" I said, "Forever."
It's like, since you should have said since you introduced me to him, because that's how I know you.
Yeah, but yeah, basically, yeah.
So anyway, he introduced me to Tom, and then I started to learn, market auction principles and balance areas. And, even today, some of the terms I use are from Tom, like the bungee jump and, just with the structure stuff, a lot of the stuff, most of what I've learned that I use exclusively now, with this information. So again, the way I'm trading is I'm using, kind of the same methods as Tom's as far as coming up with a thesis based on, balance areas and market profile composites, right? And then what I do is I'm looking for these volume events, these stop iceberg events in those areas to facilitate my trade. So that's when I want to show Tom, and I've been telling him for a while now, like you gotta watch the stop iceberg information and the options information. We'll get into this a little bit too, is at least where these GEX levels. You don't have to be an options expert, but if you know where these GEX levels are, it's very, 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 very helpful, because this is becoming the entire market, and I don't want to digress right now. But the point is, if you understand market profile and how the markets react to the tops and bottoms when they break out. And then when you get a volume event, a stop iceberg event in that area, that gives you a definitive area to take the trade, and know where you put your stop and things like that. So it just helps enhance what Tom's doing and what he's teaching. So all I do is when I get the stop iceberg events, for instance, here is this just happened in crude right now, right? So crude, some sell ice came in here, a couple batches of sell ice, or all this stuff as the real market. I mean, as the trading hour gets going, but you see 257 sell ice there. You see on the sub chart, I had a guy in my trade room figure out how to draw this stuff, these exact prices that this activity occurred on the heat map. That's what you're seeing in this this black box. It's just meaning it was sell ice. So you see there was 257 here if you look at the bottom left of my screen, and then
Good turn off my coffee. I'm on a call.
So that was about 400 sell ice, which is actually pretty big. So for each market, this is the other thing too. So I just don't trade every time I see a blip on the sub chart with icebergs or stop runs, right? It's got to be a certain threshold. And I just learned this from trading these things for 9 years now and watching literally hundreds of thousands of these setups. Like what's a lot in a market, what's not. So for instance, in crude, 150 is a lot. So anytime it draws over 150, it'll draw that and it'll announce it. Even the S&P, I don't trade 150s. I need to see 700 icebergs or more, or 500 stop runs or more, and then I'm willing to trade that area, right? So that's what I'm looking for. All this is, by the way, is if you Google CME MBO data, you can read all about it, right? So up until
I want to interject something.
Go ahead.
Real quickly. You just gave a master class in about 90 seconds on using this stuff. No, I'm serious. You've got, 700 clowns out there now being bookmap experts. They don't get it.
Right.
They don't have your background. They don't understand what that information is and what information to use from it and when it's applicable and when it's not. So, I've been telling people, I don't know if this is for anybody that's listening to this, any of my crowd, but it's incredibly valuable information, and it's auction market information. I mean, it's valid information. It's information about what the market is doing. And that's always the most important information. It's not about some magic line, Fibonacci, or, all this other stuff, fair value gaps, all this ICT crap. This is real information, and it's incredibly valuable. And from my perspective, I have sort of been putting off learning it because what I do works, but I think this is so valuable that it could really, as Scott points out, I think it could just enhance what I'm doing, because the market forms these inflection points every single day. I can see it on a bar chart, and I'm increasingly looking at these things, and you guys that are in my room know I talk about this now. I'm always wondering what bookmap would be saying at this point. So today is going to be fascinating for me to see how Scott reads these intraday pivots that form on the charts. So I didn't mean to interrupt, but I think it's really important that people understand you are not, one of these trading bro bookmap gurus. You're the real deal. So
well, that's the thing too. I mean, most people are even if they're using bookmap and they know a little bit about it, then they're ahead of the crowd right there. So you know they're halfway legitimate. Most people aren't even using anything like bookmap or understand any of these options levels, like where these gamma levels are. Again, I don't want to get too involved right now, but I'll show you. Again, I am not an options expert, but knowing this stuff, the stop iceberg is number one, right? The information as far as power in the market, as far as the best edge I've seen, right? And then the option stuff, which I'll show you, is knowing where those areas are too, to help you form your thesis with the structure stuff. That's key too. But I'm not predicting anything, right? I'm waiting to see
Right.
this.
You're looking
information.
at inflection points. Yes.
Right. So this is a perfect example of and I'm going to take this trade, this short here. So this is one of my areas. Let me put this in while I'm talking here. So 185. So this is the zone drawing tool too. So you can get this on the bookmap marketplace. So if you go,
I can't see your screen. Why is that?
you may have to.
Unshare. Yeah, I'm gonna stop because I want to see your screen.
No, you don't have to unshare. If you, well, actually, I don't know how you do it. Sorry, I was showing stuff the whole time here.
Oh, wait a minute. There we go. Now I can see it. Yeah.
I think if you,
Yeah. Now I see your screen.
okay.
I'm just showing bar charts. So
Right. So I was showing this the whole time. So hopefully the room saw it. I don't know if anyone else can see what that
you
was
guys
showing.
need to be, I'll show my screen periodically just to compare notes, but for the most part, we want to be watching Scott's screen, or I do. Now, something else, Scott. All right. Now, I've looked at bookmap and I've used it, understanding what you're talking about. But when I look at this chart, it's confusing as hell. I don't know what I'm looking at.
Right. Okay. So yeah, I'll go over this quickly, and then I want to get your rundown on the markets before the open. I mean, we have half hours
Okay.
all the time, but all you're looking at here is, so this was the, so I thought I was on the screen the whole time, and obviously nobody was watching it, right? So what I was showing here is, so this is the CME MBO data. This is the enhanced data that they have released as of about 7 to 8 years. Is it more than that now? Probably 8, 9. So if you just Google market by order data, this is what this is showing us. This is enhanced data that shows you with exact 100% certainty where the icebergs are and stop runs are, right? And it's based on order ID. Well, bookmap developers found a way to take that information and display it so you can see the exact areas where this is happening. Then I had a developer in my trade room develop, or he did it on his own and he came to me with it, how to show this information wherever this occurred price wise on the heat map, right? So I'm looking at where this sell iceberg, this was like 257. This is what I was saying earlier. If you can see the bottom of my left to right screen, actually no one was seeing my screen when I said that. 257, and then another batch came in 140, and then some more came in 88, right? So somebody, this is very likely, obviously, the same house, right? When it comes out of nowhere.
So the negatives are sells, the positives are buys.
Right. So if it's below the zero line, it's a sell ice or sell stops. You'll see stop runs here too, eventually probably in NASDAQ. And then if it's above, it's bias. So this is what I was saying. I don't trade every blip of the iceberg indicator, stop iceberg indicator. This was 139 bias. I need to see 150 or more to make it worthwhile, to make it a tradable event, right? So
and the you're getting that 150 above or below from this. Okay, that's okay.
From that,
Gotcha.
Right? So if it's threshold, and then so the way you do it, you come in here. These are the add-ons, right? So if you're in the sub chart here, so I have mine on reset mode. So it just basically resets every minute. It's just more clearly defined. You can change this thing just quickly. You can see if I put it on sliding mode, it's more, it like slides longer if I have it, or, it's not based on minutes, exponential. It's like, so these are different modes you can use. I use the reset, and you can see right here, I have it set for 1 minute because icebergs sometimes take longer to come in. So meaning at the minute mark, it'll cut off right out of my computer clock. So just because
it starts over. Yeah.
Right. So you see right here, like it cut off. That was the minute mark. And then it was kept coming. So meaning you got to keep an eye on it to say, it's not a brand new iceberg. I mean, it was still coming in. It just cut off at the minute mark. I just like looking at this. It's just a different way to look at it, where it's a little more defined. But that's what you need to know about that. So I have my icebergs right there at the minute how it disappeared and came back in. Well, this was coming in the whole time, and then that's what this drew. So I have my iceberg set for 1 minute, and I have my my stop run set for 10 seconds. 10 seconds is probably too long, but because stops are usually instant pukes, right? So, and it's usually the retail trader puking. So that's the whole idea or edge behind this. The big money is the smart money. Most times, doesn't mean they're always right. They were right initially here, and it looks like it's moving higher, but the big money is, so the iceberg orders, the reason they're using iceberg orders is because the algos, the same entity that knocked me out of the game, is why they're using icebergs. Because if somebody comes in here and look at the order book, it's 10 lots up, right? If someone comes in here and drops 150 lot on the offer and wants to sell it, what do you think is going to happen? These algos pick up that size and they start to run the market away from that order, trying to make this entity chase. And all they do is they put in their bids. They see 150, someone wants to sell. And usually when the big money comes in the market, they need to get their business done. They're not going to play games, right? So that's why they see 150, they load up their bids below. They front run the 150, meaning they start selling in front of the 150. Well, this guy's like, oh crap, I need to get my order off, right? And then he chases it. And then the algos all get filled at better prices below. Then it snaps right back, right? So this is why they have to use icebergs. And when they use an iceberg, all they have to show is, I think it's still 10%, right? So if they want to sell, so this entity at the time, and you can see, and we'll go over the rest of what the stuff is. So these bubbles are just market orders. That's who the aggressor was. So you can see here, this blue bubble, it's hard to see in this zone, but there's blue bubble, blue bubble, blue bubble. These are market buys. So somebody in here was going to the market buying, and they were running into a mouthful of icebergs, sell icebergs, right? So you can see the bubbles, that's the market orders, and then the icebergs. So anyway, in the order book at the time when this came down, someone's like, oh, I'm going to jump up and buy it. There was like it looked like 15, but behind it there was 135, right? So they jumped up like, I'll swipe that 15 lot. No, you won't, because there's another 400 behind it. See what I'm saying? So that's why they call it an iceberg. It's like the market running into an iceberg, right? So knowing these areas at your important areas is the key, is the best edge that I've seen, right? Because I have a million, important areas that I look at, right? But I still will not place trades. So this is what I was getting at. So this is one of the main areas I look. These are Ludwig levels. And she said, I talked to her yesterday. She said she knew you, Pamela Ludwig. She's been in the market for she's had these for about 20 years. I don't know if you've ever heard of her before. She said she knew you, Tom, but anyway, I don't know her parameters of these, what these are made out of. It's not anything with order flow. I think it's something to do with like market profile, kind of like you're looking at. But the thing is, I watch these long enough, and I don't just bring things into my trading lightly, right? I got to watch it for a long time, and we're going.
No, I can relate to that.
Yeah, so I've been using these things for almost probably 6-7 years now. But I was introduced to them by when I first started my trade room. The guy kept telling me about these Ludwig levels, and I'm like, well, what are those? And I started watching them, and it is ridiculous how these. So the main ones are she calls it big red and big blue. Those are the support and resistance. So when this one came up and bounced off, right? So I don't want to get into too much right now, but the point is, this is one of my important areas. Did I just take a trade there? No, I would have taken a trade, because now I have a volume event that proved bearish, right? So just going over what's on this chart. So what you're looking at is the iceberg event draws on the chart. This is also showing you the ATR, right? So this blue line is the current ATR. So that right now it's just moved the decimal. It's 16.4, meaning this is moving about
ATR of what?
A 5-minute ATR, average true range.
Okay.
Right. So this is just telling me that the volatility market. This is the best way I judge as a day trader the volatility, right? The 5-minute ATR.
Right. Yeah.
Right. So right now, this is just telling me that this market's moving about close to 17 ticks every 5 minutes rotation wise, right? So that's very important to know, because this is where traders get smoked too. They, a lot of them have at normal market days, they say, okay, well, in crude, I like to risk 10 ticks to make 20. Well, that's great when the ATR is 18. When the ATR is 75, you're risking 10 ticks, you're going to get swiped out of your trade almost every time. So you've got to know that the two most important things in trading, in my opinion, are volume and volatility, right? Volume is what moves markets. Price doesn't move markets, volume moves markets, and you got to know the volatility. So back to what this is. So this is showing you that's the event. That's the sell iceberg event drawn on the chart. Then you should have the ATR, the blue line is the ATR. And then this is how I determine whether a particular event is bullish or bearish. If it's able to push the ATR out of the zone, that's how I quantify from my position trades, whether it's a tradable event to the short side. So I was just showing you that Ludwig level, right? Well, if I want to go short, and this is a great example of how these prices are so damn exact, it gets really annoying because I get filled with the tick all the time. But for me to go short, I want to see the market show its hand, meaning, okay, that's sell ice. Yeah, it has a better chance of going lower than higher, but you can see right here, like the sell ice was right momentarily, and now it's not, right? So just because the big money is doing something, it doesn't mean they're always right. They're right more than they're wrong because they're the big money. But this is a great example of, yeah, it did react here about 30 ticks, and now it ripped up. What I'm saying is,
let me ask you this.
sure.
Let me ask you this, Scott. Okay, so you're talking about the big money, and I agree 100%. I've said this for decades. It's only the big money that can move the market directionally.
Right.
But when you're looking at volume intraday, you're not necessarily looking at directional volume. You're looking maybe at part of a trade. And I think this is where some of this option stuff comes into play, because you can have big volume on a market going up, but it's a hedge, or it's a piece of an option trade, or some it's a an arb trade.
Right, that's what I've always tried to
index.
explain too, because it doesn't, you're never, and this is what I get all the time, because people are trying to predict, right? They're like, okay, well,
Right.
what's this person
Yeah.
doing? Are they getting out of a long? Are they hedging options? I don't care. You're never going to know unless you're sitting next to the guy putting the order in, or you're God Almighty, right? And I doubt you're either one of them. So the point is, all you need to know is this is where a lot of volume transacted. This is an inflection point, like you say. Again, that's another word that I've always used, that I've learned from you, right? There were buyers. You can see the blue bubbles here, right? And then the big money was selling. Somebody's going to be right. Somebody's going to be wrong. This is the engine I need for my trade to let me know, okay, this area is valuable, right? So whether it be a Ludwig level, whether it be a market profile area, again, we're going to look at some of yours here in a second, right? So this information is good to know. If you're coming up to a market profile high, right? That Gaussian shape that Tom likes to talk about, right? And you see this activity and you say, okay, there's sell ice. You know the high is a good area to put trades on, right? If it stutters there, right? Well, isn't it a better area if you now see that big money is there, or if you see big money try to defend that area and they're wrong? So you see what I'm saying? That's the point. You want to identify these areas. Now you have yourself an actionable area with rules, and that's how I base my rules on this zone drawing tool. And then you got the position sizing here too. But this is what I look for. So just because we're at an important area, I just don't throw on trades unless, this is how powerful this stuff is, unless I see a stop iceberg event and it confirms in the direction that I think it should, right? So again, if this was the top of a market profile composite, well, I use composites, we'll get into that too, but say it was the top here and you see the sell ice, you're like, okay, I still don't jump in. I force the market to show me that this is going to be a worthwhile short by if it can push the ATR out of the volume of it. And that's all I'm doing all day long. We have another trade too. It's called a reversion trade. These happen all day long. And you just saw it right here, right? Then this could be useful for the market profile stuff for important areas too, where you're waiting. We call it back in black. So say this is the another market profile. I'm using that a lot because that's your main thing, right? So say this is a low, or down here is the low, the bottom of it. You see it bounce off the bottom. Well, you can take these trades, and that's what this position sizing is. Take these trades back to the zone and out. So this is more of a scalp, because most traders gravitate towards scalping because they can't stand sitting in trades and watching this stuff while they're in a trade, right? Well, this is more of a scalp.
They don't understand that, because they don't understand development. They don't understand structure and what truly invalidates an idea. And that's something else. It's a nice segue. So how many times a day are you looking to trade? How many good trades a day do you find, Scott? If you're looking at just say, whether it's crude or the ES or the NQ, just take one contract. How many good trades a day, and what are you looking out of that trade?
Right. So I'm taking, I probably watch too much, right? Because I'm an educator too, and I know other people are trading other things, and I want to show different markets. So I'm taking position trades or reversion trading. So these are all my positions trading strategies. So what are these? These strategies are just looking for the iceberg event at my important areas. So I just was talking about that's a stop run at the lug. When we saw that sell iceberg at the lug, we call that I lug you, right? So I have funny acronyms for all these trading strategies, right? So something like Tom's would be a point and control trade. Like he's looking for he knows point and control is powerful. As the market moves into it, he'd have that would be his important areas. So these are my position trading strategies that I take, right? And then we have the reversion strategies, which is more of a scalp. But as far as position trading strategies, I'll probably take 2 to 3 a day per market, probably more in NASDAQ, but I mean, maybe 1 or 2 in crude or gold. So that's the thing too. I have a large bandwidth, right? So I was able to utilize that bandwidth when I was a scalper. I just process things very, very quickly. I'm able to watch, 8 markets at a time. A lot of people can't. I shouldn't say most people. A lot of people can or don't want to. The reason I do it is because I want to take advantage of every time I see a step iceberg event in some capacity because it's such a powerful thing. So, what you'll hear as we're on this webinar, you're going to hear stuff firing off in wheat and beans and copper and silver. So I'm able to watch all that stuff and place trades accordingly. It's a weakness too, because when I'm on these webinars, I make a lot of mistakes, but I'm taking maybe a couple trades a day per product most times. I mean, there's been days like, yes,
that's what I wanted to know. So you're not one of these guys that's trading 50 times a day, scalping the NASDAQ, the NQ,
no,
or the MNQ.
The only scalp trade that I'll take is when we get is trading a reversion trade. So these markets' propensity to come back to the volume event again.
Right, when it's obvious that that's what it is, and it's highly likely that's all there is in the trade.
Right, exactly. Or I'll trade both, right? So say this was a short. It does this not, you'll see as when the market opens. It's ridiculous how often this happens, right? It tags it just at the ATR. So quickly what this chart is showing you, you have all the liquidity. So I can turn that on and off. These are just all this is these colors, like the red and the yellow, that's just orders in the order book, right? So you can see the algo's playing their game right here, flashing their, pulling orders, putting in orders, pulling in, they're just playing games with people, right? So you can turn that down to here, right? Make sure it's up. Wait, down here. So if I just turn all that liquidity off, you see my screen's basically black, right? Then what you're seeing here again is the zone drawing tool. Then what you're seeing is the ATR. So meaning this was the ATR that right now it's 19. So that was 19 points away from the zone going up or going down. That's how I determine whether event is bullish or bearish. Then the yellow line is just where I enter. So this is all from trial and error, right? So I used to get in. So say I wanted to sell, I used to jump it right in the middle of the zone, right? And I learned the hard way, I got chopped up. Then I would say, okay, I'm going to get in once it breaks the zone. And I learned the hard way, I got chopped up. So I figured out after trading hundreds, literally probably a million of them over the last 9 years, the best way to take position trades to avoid this nonsense, the algo whipsaw, is to force the market to push the ATR out of the zone. And then I enter 15% more of an ATR, right? So again, this is all trial and error. So that's what the yellow line is. Then if I get in a trade, so say this is a point of control on a market profile that I decide I'm going to take a short. Okay, I validated, showed the ATR, got the blue line out, the yellow line's my entry. My stop goes all the way on the other side, yellow line. So if I'm going to be wrong on my trade to avoid the algo nonsense, this market's got to push back the full ATR to the zone. It's got to get through the volume event where there's strapped traders, right? These buyers were not feeling very good, and that's why it reacted the first time. But it's got to get back through that. Then it's got to push another full ATR plus to stop me out. So yes, this erodes R, but trust me, I like making 4, 5, 8 times my money as well. I'm a day trader though. But the point is, this is the best way to avoid the whipsaw. And this is all built into the position sizing here, right? So I'm risking $400 a trade, and this is all part of the zone drawing tool on the bookmap marketplace you can get. If you come in here, I could put, I'm risking $400. You just put in I'm risking this. Don't pay attention. Don't ever risk 10% of your trade of your account on anything, right? I'm just risking $400. So I put in 4,000, risking 10%. So this position sizing, this is why most traders fail. They're over trading their account, right? So if I'm risking, I know if I put on a short here, I'm getting in there, getting out there. I could put on 0.8 of a full contract or 8 micros. And if I lose,
now this is a really key point I want everybody to make note of. Scott is trading market structure. He's trading the market. He's not trading his money. Now he defines the money he's willing to risk, but he doesn't start with I'm risking $400 and then put some sort of arbitrary $400 stop in. He looks at the market and says, okay, this is how much risk I need to take for this to invalidate me.
Exactly.
What is the calculation for the number of contracts I can trade for this trade? That's
exactly right. And I know from just watching so many of these, I know if I get filled here, and I'm actually lucky I didn't get this on because I would have lost in this trade. This was the slug or the I lug you, the iceberg at the Ludwig level that I was showing you, right? And this is how if you get this tool or you understand these there, you will be amazed at how often this happens. Like I get filled with a tick probably 10 times a day. It's really annoying. They're very accurate. So anyway, I would have been in there. My stop's up here. That trade would have been a loser, right? So the point is, you have to realize that trading is all probabilities, right? When you have an edge, it just works more than it doesn't. And that is it. It's just like a casino.
It's math.
It's math. It's my main analogy. A casino, when they deal cards, do they win every hand? No one would go if they won every hand, right? They know, yeah, they're going to have losing days. A whale's going to come in and wax them for $1 million once in a while. But they know over the long run, aka a year, they know because of the math, the probabilities are in their favor, they are going to make money. It's the same with trading. If you know you have an edge, you keep putting on the trade. So yesterday, as per example, I got smoked on the way down. I took a reversion trade on my AM webinar. Way down, took a reversion trade coming back, run over like yesterday was some yen story. That was the move down, bungee jumped in Tom's terms, ripped back up. I got run over both ways, right?
I got run over. I got run over too. And my guys that are in here saw it in real time.
Right. Well, so do mine, right? But my point is, I even said this on the webinar. It's like, and I've been trading 25 years, and I was like, you get that feeling like you don't want to put on the next trade because you're just like you take a loser, and it's like you don't want to put on the next trade. Well, that is counter of what you need to do as a trader if you know you have the edge. I know this is the best edge I've ever seen. So
if you have an edge, you have to trust the math.
Right. And then the very next trade popped up, and I can't remember, I think it was a winner, but this was actually on this move down. Sorry, this was some of the stuff I was setting up the email on, but I'll show you this here quickly just to show you. This was after I got run over on how if you keep putting on the trade, if you have an edge, that's the key. So you keep dealing the hands. Yes, you have a stopping point for the day, right? So you should never be losing more than 5-6% of your account ever in a day. If you do, you're not going to be you're going to have a blow up day. It's 100%, right? So that's why you get out of your trade or you stop yourself out for the day. But this is a perfect example. So I missed this trade because this was this move down. I got run over on this one. Then I took the reversion trade. Remember, I was talking about the reversion trade. I took this, I got run over coming back. And I missed this trade, right? So here's your market profile composites. So composites, I merge days, and I can't remember if you do this or not. And again, I want you to go over the markets here quickly. I'm gonna stop talking for once. So this is this is where I look for an event. This is a perfect example. There was sell ice here that they didn't do very well.
Right. That's a major inflection point. I don't even know what market that is, but it doesn't really matter.
Yeah, it doesn't matter, but this was Russell. This is where I got run over on the reversion trades. Anyway, so I get run over on the reversion trade coming down, run over going back, hoping it came back to the zone. And I missed this trade. This was a pick. I call it profiles encouraged, market profile. I got the volume of it and an important inflection, and I missed this huge trade. Right. But the point is, I could have easily said, and it's just because I missed this. That's not why I didn't put it on. I just missed it. I could have said, loser. No, I'm not going to put that one on. But that one's the big winner. That's why you got to be consistent with with your edge. And what I'm showing you, in my opinion, is the best edge I've ever seen. And then when you tie it in with structure stuff like Tom teaches, now you got yourself, you're ahead of the crowd times 1,000, right? All right, so I'm gonna we'll go over all this. I mean, we're gonna be on for a while. I want you to if you could break down your markets in the next 8 minutes where the market opens. Like, what are you looking for? Let me see if I can.
Okay, all right. Let me share some stuff here. Let me go back up here.
Let's see if I can share here. Stop sharing. All right, you should be able to take it from there. I was hoping we could both share the screen, but it's not working. Shocking.
Yeah, that's all right. Okay, let's all right, so most people identify me with quote unquote market profile. And not so humbly say, I think I have studied market profile as deeply as it can be studied. I started in the mid 1980s as a stockbroker, and I won't go through that whole story, but I really was sitting on my desk with a computer on my desk trading OEX options. And not many of you were around then, but the OEX was sort of the ES mini micro contract of the day. And I was trading hundreds of OEX options. And I made and lost a couple fortunes doing that. I finally figured out in 1987, after I'd made and lost seven figures in the span of about 20 minutes on Monday, October 19th, that I really didn't know what I was doing. And, found market profile. And I was using CQG at the time, and that was the only platform you could that displayed market profile. I was using it, and it was an enablement. And I called up my rep, Becky Gilfrey, and said, Becky, what is this? She said, it's market profile. You want to try it for 2 weeks? Sure. I put it up. I saw what you see on my screen, a bunch of letters. I thought, what the hell is this? I called her back. What is this? Well, hold on a minute. And she said, well, it's this graphing thing invented by Peter Stellmeyer. I said, well, who is Peter Stellmeyer? Well, blah, blah, blah. Give me his phone number. Got his phone number, called him up, and started talking to him. And I talked with him on and off for the next, 10 plus years. I flew to Chicago a couple of times, spent time with him in his office trading. This is all a really long story. And actually, it's in my first book. And then I met a guy named Don Jones. Well, Don Jones worked in the same building, the CVOT, as Stellmeyer. Don was literally a rocket scientist. He worked in the aerospace industry in the 50s and 60s. And then he got into trading, started his own hedge fund, did extraordinarily well, found Stellmeyer's concept. And as a scientist and a mathematician and a physicist, it made sense to him, as market profile does to anyone with a math background, because you see these Gaussian shapes. So it makes sense. There's an order to it that's mathematically elegant. And so Don started working with Stellmeyer's work. And again, this is a long story short. Don validated mathematically Stellmeyer's concepts. Now, Stellmeyer was an incredible visionary, but he had a rather abstruse means of communication. If you've read his books, they can be confusing. I have all his books. I have blue books he's written. I have probably almost everything he's ever written. A lot of it's not public information, but it's incredible information. But you have to, I've worked with him, studied his stuff for years and years and years, and I finally understand what he was trying to say and what he was trying to get across. He never took anything simple and made it simple. He would take simple things and make them complex. That's just the way his mind worked. And if I have a gift, it's my ability to take complex concepts, understand them, and then break them down into their functional simplicity. That's if I have any ability in this stuff, that's what it is. So I've been able to take market profile. And really what's important about market profile, you don't want to be a market profile trader. You want to be an auction market trader. The market profile graph is just a visual footprint of the auction process that displays data in a specific format that can help us to identify market condition, the market condition of an auction market. There's no magic in the market profile graph. It drives me insane to see all this crop of gurus trying to make magic stuff out of market profile. The highest use of market profile is to do what Scott's doing with bookmap, and that's to identify inflection points. It's that simple. And so if we take a look, and I'm going to show you, now, am I going to mess us up, Scott, if I run through the opening with this stuff?
No, I mean, if I put on a trade, I'll just go over it after.
Okay, all right.
I'll talk it out. I'll let people know what I'm doing, and then I'll show it. Lately, it's been very dead at the open anyway, so I doubt we're going to miss much. It's been horrible.
Okay, so here is the day session of the profile graph, and I lean very heavily on the day session. Now, if I scroll through here, if you don't know anything else about this and it just looks like a bunch of letters, that's fine. But what I want you to notice, what are the common characteristics of each one of these structures? Now, each one of these structures is a chronologically defined session, and that session is a day session. Each rotation, each split is 30 minutes. But I want you to look as I scroll through here, and there's certain characteristics that all of these profiles have. And what you see is the market is heavily rotational, especially intraday, heavily rotational. And that can be your best friend. There are so many different strategies you can use trading, understanding the rotation of the market. You can trade directionally, or you can trade the rotation. Stoudemire would trade a direction, but he would also take advantage of the rotation. I was sitting in his office, and he'd take a look at the screen, and he'd buy this and he'd sell that, and he'd just walk away. And then he would come back and see how the structure was forming. And he'd either reverse, add to the trade, or get out. But he was completely trading the auction process. Now, let's go to, okay, here is, this is incredible. Now, today is the last day. Is today the 30th? Yeah, today's the 30th. So this is the last day. This is the quarterly auction. Okay, this is the entire second quarter. So each one of these splits is a week. Now, this is just an absolutely poster child of the three-step auction process. You have a trend, a distribution is what Stoudemire called it. Then you have a stopping price. Well, you can't identify the stopping price except in hindsight. But then you will inevitably get this rotation. And it occurs in all degrees of time all the time. You can read it. You learn to read it on a bar chart. During the day, I seldom am looking at a profile chart. I can see the profile because I've done this for so long on the bar chart. I know Scott does this. Scott will tell you that here's the balance area. Well, that's what this is. This is a balance area. This could be an hour. This could be a 1 minute chart. It could be a monthly chart. This happens to be a quarterly chart. These happen to be weeks. These could be minutes. You see the exact same thing. And that is what is so powerful about this base understanding of how markets work, this worldview of markets through this auction market lens. And again, the profile graph is a wonderful tool, but it's just a tool. There's no magic in it. It helps us to identify the inflection points. So where are we? What are we doing here? Well, we are clearly in a bull market. There is nothing that says we aren't. And you've got in every bull market, and Scott, you can verify this, in every bull market I've ever traded, as soon as the market makes a new all-time high, people come out of the woodwork calling for the end of time decline. And it's just unbelievable. And I'm not smart enough to know when this ends, but I'm smart enough to follow the price action and get clues as to when it might end. And it doesn't end until something happens, and it has to start taking out critical downside levels. Now, let's go to a bar chart. There are times when a bar chart can give us more clarity in terms of what is important in terms of, is a trend changing or not? Now, this happens to be the Russell. The Russell closed a new all-time high yesterday. But, until the Russell starts taking out previous important lows, and with the others, when we're talking about the stock indices, okay, it's sort of unique because we have indices, but we're not in a bear market until everything is pretty much in sync. Well, right now, everything is in sync to the upside. Now, we have this disparate activity on a day-to-day basis between the Russell and the NQ and the SPX lagging the Dow, et cetera, et cetera. But they're all pretty much in sync in the larger degree time frames to the upside. So the path of least resistance is higher. This market is remarkably and relentlessly bid, and it's relentlessly bid until it's not. Now, if I'm day trading, my most important areas as I come into the day every single day are the previous day's high and low and the previous day's close. Second to that is the second day back from there. And it's uncanny. If you go back and look, you will see that in a strong trend, particularly an uptrend, you very seldom get a retracement below the 2-day back low. So you always want to be looking at the previous day's low and then the second day back from that. And then you're looking at the balance areas, like right here. This was a balance area. Okay. Right in here, this whole area. And then back to the upside, right in here. And then you had this conviction day. Conviction is very important. Conviction is a concept of it's a one-sided trade. It's when the buyers are overwhelming the sellers or the sellers are overwhelming the buyers. And that marks important levels on your chart. That's what, a lot of times you will have quote unquote single prints form. That's where that came from.
But
That's
another term I use for you is directional conviction, right? So when you get which
we're
we're actually at right now, where one started in NASDAQ. So this is a pretty important inflection point that I'd be looking for a volume event to trade this area.
Right. And I know you probably use this too. The three most important things in my mind, as far as structure is concerned, you've got buying and selling tails. The candle, all you candle people, I started trading before candles, so I'm still using bar charts. But the wicks, it's rejection. That's price rejection, up at the top or down at the bottom. But it's giving you a level to watch. It's an important inflection point.
Right.
And again, that's something else.
Right. I call them
tails. Yeah, I do too. Buying tails and selling tails.
Absolutely.
Right. That's what I've always called them. Buying tails and selling tails is correct. If you look on the Russell here, this is a selling tail right here.
So why don't you? This is one of the questions I've always had. Why don't you use candles versus the bars? The bars, when you show that, like it kind of scrambles my brain a little bit. How come you don't use candles? Is there a reason?
I'm just I started trading so long ago. I'm just an old dog. I've started to sort of watch some charts with candles on, and I think candles are probably more helpful, Scott.
Yeah,
but
I don't mean all these candle setups, right? I'm not talking like dojis.
No. I know you're I know you're not. I know you're not. I know you're not.
Right.
But I can read the bar chart like people read candles, and I'm looking for the same thing. I'm looking for where it opens, where it closes, the buying tails, the selling tails. I can see all that on a bar chart. It's probably easier visually to have a candlestick chart because it sort of gives you the information right there. It's hard to miss it. You sort of have to learn to interpret this. So your point's well taken. You're probably better off, like Scott, using candles. So, but anyway, so what I think is going to happen today? Well, right now I'm looking at a 30-minute chart of the NQ. I'm looking at a 30-minute chart of the ES. We've got a divergence. You have the NQ screaming higher. Now, I don't have, let's see, what are the other four doing? I have them on the chart. So you have the Russell on its low, you have the NQ and the ES high, you have the Dow on its low.
Have you ever seen this kind of period?
Business as usual.
Have you?
I
just don't ever remember seeing like the Russell and YM do like almost the opposite of the ES and NQ these days. I don't remember that being the case up until very recently. Do you? I mean,
no, you're absolutely right. And it's taken away one of my key setups. And that key setup was you could put up a 5-minute bar chart of the four of them. And at inflection points, you would have one or more run stops and the others wouldn't.
Right.
And that was money.
Right.
Now you can't do that because
yeah, I mean, I know they're comprised of different stocks.
You can still do it with the ES and the NQ, but you can't say the Russell and the ES or the NQ, or even the Dow.
Yeah, I mean, I know they're different stocks, but they shouldn't be diverging like a oil versus.
Well, it's these institutional algos that are running programs and arbitraging between the indices. There's a lot of things that I used to use that don't work here. I used to rely very heavily on breadth. Breadth is worthless now, for the most part.
So you're talking AD, the advanced decline. You call it breadth. Yeah. So I have it up as ADD, but which I have as well.
So again, now what I'd want to see, I want to see if the ES can take out the 775.15-ish area. What is it exactly? Here, let me show that screen real quick, okay? I'll show you what I'm talking
And there
about.
has not been one volume event either. So I do not trade unless I get the volume event, right? So I just watch it for an important area. Great. I personally do not trade. And this isn't, these are important areas for the options as well, as far as these areas. And we'll go over the option stuff again. It's not, I'm just looking at these GEX levels, these gamma levels where the dealers have to hedge. You have to know that because they're hedging in the future. So if you know these areas, just gives you another layer of confluence. You know, if you're looking at your market pro, whatever you're going to show here, like right now, we're at important areas in the SPX and QQQ as far as gamma levels where dealers are going to be hedging, meaning it could be a good resistance area. I'll show that here.
Right. Well, if you look at my screen on the left here, this is a 30-minute chart of the ES. This is a 30-minute chart of the NQ. Now, these still are very highly correlated for obvious reasons. And, you know, this is something to keep an eye on, Scott. This is the divergence that is going to be rectified one way or the other. You're going to have the ES take this out, or we're putting in some sort of potentially significant, at least day session high.
Right.
So because you're not going to have this divergence linger like this for long.
Right. I always
Now to get into more of the weeds, and again, you Scott and I both use the auction market process. We use it in sort of different ways, but there's some similarities. I'm trading from a bar chart. And like Scott, I'm trying to catch intraday trends, and I'm trying to trade with the trend. Now, intraday is tricky because there's so much noise. So the trends there's more noise in the trends than if you're looking at a daily chart. The smaller you go down in time frame, the more noise you're trading. That's just makes sense. It's just a fact.
Right.
Because the purpose of the market, and this is auction market concept, rule number one, the purpose of the market is to facilitate trade. And this also gets into Scott's work with bookmap. Is trade being facilitated or not, and what's going on at these areas? So when I'm trading, generally I'm looking at longer term charts, but I'm executing and managing trades and confirming my trades on a 1 minute chart. I use moving averages, and the main thing that I want to see is the market making higher highs and higher lows, pivots on my 1 minute chart. Is it making lower lows and lower highs, pivots on my 1 minute chart? And I never, ever, ever want to be caught in the wrong direction against that pivot pattern, because that is telling you the migration of value in that time frame. And then I use, moving averages. I find moving averages to be very helpful. I've said this a million times. You cannot rote trade moving averages, but they can help you. And they can also keep you out of trouble. I'll show a chart that I show in my room all the time in just a minute. But, when I'm chomping at the bit to fade something because I think it's overbought and or buy something because it's oversold, the reality check is, let's look at a 1 minute chart. Is there any indication here of a higher high, higher low, or is there any sort of cross on these very short-term moving averages that I use? And if the answer is no, then I have to sit on my hands and not get stuck on stupid fading a trend all day long, like we've all done, and blow up. So, I try to have rules that are relatively simple and try to follow those rules. And I try to catch intraday swings. And like Scott, I'm looking for major inflection points based on what happened yesterday and then how it fits with what's happening today against the inflection points formed yesterday and the day before. That's about as simply as I can put it.
Let me we can go back to you here in a little bit. I'm gonna show just what I'm seeing. There has not been a volume event.
All right, I'm gonna stop my share so I can see your screen.
Okay, you got me. Why this thing's on this page? It's really annoying. Can you see my screen?
Yep.
All right, so there hasn't been anything. There's some light. So again, I don't trade unless we get threshold. If it's threshold, meaning I need to see in NASDAQ, for instance, a meaningful amount to trade. These stop iceberg events is 150. So this was not, you can see here's this was under 100. This is barely 100. If they're right on top of each other, I'll combine them, right? And I can draw that zone manually. I mean, this was, again, 80 something and 111. We're talking, it wasn't too bad. I could probably draw this and combine these. I don't usually do this just to get the threshold. So my threshold for NASDAQ's 150. So again, this won't draw on its own, but this was 111, and you can see there was some over here. So you can see right now, right? Like the buyers are being aggressive, right? I mean, you can see this in a bar chart as well, a candlestick chart, but you can see the market bubble, blue bubble. Mine are blue and red. Blue are the buy delta, red or sell delta, just meaning who's the aggressor is winning, right? So the buyers. Sellers trying to buy back, buyers. That's information, but it's very fleeting. This is the stuff I'm looking for. But you can see someone's been, and not huge, but you can see this is when this sell ice started coming in. It started coming in right around here, right where this starts to spike, right? So I'm going to draw this. We'll just take a look at this. Because this is an inflection area too, and in multiple ways. So I'm okay drawing this and combining these two, and I'm going to show you guys here in a second what I'm talking about. So that was the first area. So, I had to draw these by hand for years and years and years. Like I'm talking 7 years before the zone drawing tool. This thing's been a godsend, and it would take me forever on the webinars. But the way you want to draw it, you just want to keep expanding it. And this is what it does automatically when you get a threshold event. You want to keep expanding it as you can see every time this spikes, it's still coming in, right? So this was, if you look at my bottom left, it was 45 icebergs, then 55, then 77, then 81, right? So you want to continue to have the zone encompass that activity, right? We got a number coming out right now too, so I'm sure something will go down in the middle of this as usual when I'm doing this stuff. Right, so that's basically that last spike there, and then I want to combine the other one too. So let's see what that looked like. Then you see it started coming in again here. On this spike, so that started there, but that was still inside there, so I don't do anything. Just trying to get both of these events here. So that looks like that was up into this a little bit. Yeah. So you see right here, see how this spiked? So that I got to move this zone up a little more to encompass this iceberg. Again, you don't usually have to do this. It usually draws on its own. This just was not threshold. So I have to do this. And then you just literally just go across here. I teach this in my course too. If you guys, I have 3 distinct courses. The Stop Iceberg course is my main course, and I go over how to draw these manually and everything else. But that looks pretty accurate, right? So, I mean, you don't want pretty accurate, but when you're doing them by hand, you gotta do the best you can following the 2 events. So that's a sell ice. So we're basically sitting right here. So this is an important area. So the other things you're looking at here are GEX levels, right? So this is increasingly more and more. The 0-day to expiration option game is the biggest manipulation in the market right now, right? It's
unbelievable.
It's
Scott, let me. You're talking about these GEX levels, and because of the option stuff, you sort of have the tail wagging the dog now with that stuff. But does bookmap give you the GEX levels, or are you getting that off of what's the
yeah? So these here, and actually, I do have a little flip book. I could put post this in the chat just so people can see what I'm using in my trading here. I usually do all this for the bookmap. I do a bookmap webinar every week, free webinar, trading webinar on Thursday. So I'll be in there tomorrow, but I usually post that in there. So this flip book, which I'll go over here. We post this in the room. You can find the chat. Let's see. If you guys got questions, put them in the chat. I'll try to look at it. But anyway, so here's my courses. Stop Iceberg course. Trading strategies are just literally my important areas that I look for the value events. We talked about that, and the ATR reversion trades, the propensity, and when we get an event, you'll see how they come back to the event. It's more of a scalp trade, right? You can use that with your, with the higher time frame stuff too. Here's a zone drawing tool. So you just click on all this stuff to get it. Here's my room. But anyway, this is what I'm using. You need bookmap. Obviously, you need the MBO bundle to get the information I'm showing you, right?
Now, Scott, if I'm not mistaken, you can, if the guys that use, I know a lot of my guys use Thinkorswim. Is that book map offered by Thinkorswim adequate? Is it the full version?
No, it's not the full version. That's the problem. So you don't get, I don't know exactly, but I know it's watered down. You're gonna need, if you click on this, you get a discount to the basic software, and the MBO, there's no discount, but you have to have the MBO bundle because you won't get that enhanced data that drives the engine for the stop iceberg information, right? So anyway, so the GEX levels you see on my heat map are the Mentor Q levels. So you got to remember, so there's different GEX levels that I'm watching here because these are the longer term ones, right? So you see the Mentor Q, meaning the daily ones that can go back days, weeks, or whatever. So these are
Now, is this an add-on to bookmap?
yeah. So this is, you got to get Mentor, you got to sign up for Mentor Q. That's these guys here. Right. So you click on this, you got to sign up for that and you get this, but you need to get these on the bookmap heat map, and you get them on other programs too. You can get them on TradingView, you can get them on Sierra Chart. You don't have to have them on bookmap. I have them here, and it's just probably too much for people that are watching this for the first time too. They see all this stuff on my chart, but it's very simplistic what I'm looking at. There's nothing major. There's nothing very highly technical here. Anyway, if you want this, you got to go to the bookmap marketplace and get the price lines add-on, and they give you a they give you a discount. Method Q gives you a discount for it. So you go to the marketplace here. Here's my thing for. So that's this. So the Pro for mine, basic just gives you the ATR and the event. The Pro gives you all the reversions and all that. We'll get into that as they happen. But if you go over here and you put price lines. So you need this add-on to get it. It's $149. If you once you get Mentor Q, they have a discount code and $50 off. So it's $100 for lifetime, right? And that allows you to bring the GEX levels on the chart because you want to know where these are. So you can see here's and the lower the GEX level, the more powerful it is, meaning there's more gamma here that dealers need to hedge. So we actually have trades for this. I could have put this trade on called the Sexy Gexy, where I'm looking for an opposing iceberg into these orders because I already know the dealers are hedging as the market comes into these. Then you see the big money real time coming in here. Now you got yourself an actionable area. And you can imagine if this is like a market profile, node or whatever, high volume node, or whatever, it's even more powerful, right? So this is knowing this stuff. You have to know where these dealers are hedging their options because they're hedging in the futures, right? So I know that when the market comes here, it's got a it doesn't mean, if it blows through, it's telling you something too, right? But most of the time it will hit these and react. So these are the Mentor Q GEX levels on the chart. There we go. So this is a puke, you see.
Yeah, we a classic breakout of a balancer. You knew they were going to run it one way or the other.
Right. And this still isn't out of the woods yet, right? So first of all, we're at major GEX levels. We're at GEX 1, GEX 4, and the Mentor Q stuff. We're at major GEX levels here in the spot on the spot gamma. That's the other one I use. They're incredible because they have they're incredible as well, I should say, because they have the real time. We'll get into this too. So this is what's going on with the flow right now, right? And if you don't know this, you're flying blind, right? So you can see, and this is a flow alert. So this is actually a short trade for me. It's called the Flowbee. Yes, it's named after the haircutting machine you see on late night TV. So you can see here, when this moves a notional $1 billion or more, it's significant per Brentford spot gamma. So this just moved $1 billion straight with a flow. Usually when you get a flow alert, that is an inflection where the market will flip the other way. It doesn't happen every time, 3 out of 4 times. So this is actually, I could take a Flowbee here. I'm going to wait here a second because it's just blowing through here. So you got to use some judgment too. So these trades that I take at these gamma levels, I just jump in right in the middle of the event. I don't wait for, we talked about earlier, I wait for the move out, or the ATR move out one way or another. So this is a very important area. You're at GEX 1. And actually, I'll give this a shot here. This feels like suicide, right? But this is my trade. This is what I look for. I don't know what's going to happen next. I know I'm getting these opposing iceberg events. So you got the sell ice that was here earlier we talked about. And now you got a stop run. Stop runs are usually the dumb money puking, right? So it's very important to know that because most of the time, just like anything trading, nothing's 100%.
Right, within two on validated.
So
So so you're saying this area is a short for you?
for a certain strategy potentially, but it's just basically
Okay.
blown through here. If this can kind of hold here, and and if I do put this on, my stop's just right here, right? So I can I'm going to put on a couple here just because I got so much better.
Okay, say this is not a short. If I had to put a trade on here, I'd go long.
Right. Well, no, I agree. I agree. So that's my point. I don't know what's going to happen next. This couldn't look more bullish, right? But these are the most important thing that I look at, that I think anyone should look at, are the stop iceberg events. I'm getting potentially, and they haven't proven bearish yet. So for most of my strategies, I make these things show its hand, meaning push the ATR out. I am willing to give this a shot, very, very low risk here. Because I got this into a GEX levels. So this is not a high percentage trade right now, obviously.
So if you go short here, you're going to give it.
I'm stopping right here.
8 handles.
Yeah, 2650 is where I'm stopping out. But this is great risk reward because if this does hold,
Okay, all right.
Right.
Okay.
So I'm giving this a shot to hold because why? Because I got my volume event, and this is usually a fade. The stop runs, it's just guys puking. It's not initiative buying most times. We're at GEX level. We're at a GEX level. And then you look at these two. I look at this one. Look at these real time guys. Let's see if we're through them or not. We got them here too. So you got, this is real time. This is 0 day to expiration where these dealers are loaded up, right? So they are defending these positions. That one's there. You got SPY there, and then SPX, there's nothing right here. This is just another way to look at the 0 day to expiration. You've got to know these areas, very important. So you can see how you can overlay this with what you're doing, Tom. So it's like you're at your inflection point, and then you see, hey, look, there's real-time options activity, 0 day to expiration, biggest manipulation game in time. I know these dealers are going to be hedging, right? So again, it doesn't mean it can't blow through here, but the percentages, if I take enough of these, and this just validated long, and I potentially take a reversion.
Thanks very much.
Was that?
Oh, that's okay. Thank you. Yeah, perfect. That's okay.
You guys
Perfect.
You
Yeah,
guys gotta
super.
mute
Good,
yourself.
good. Thanks. Is it okay?
This is
Thanks.
the problem with the Zoom effect.
Have a good afternoon. Ciao.
You guys mute yourself, please. Whoever's talking right there, whoever just said ciao, I can hear you talking. It might be one of my guys because I call them the Fab Four. They're the top 4 profitable traders in my room. I let them just come in and talk. They usually do it on my own, but it might be one of them.
I don't trust anybody in my group to do that.
Well,
I'm just kidding.
Yeah,
They know
I
I'm
mean,
kidding.
So again, I took, actually, this is on the wrong account, but I'm going to switch this account. But this is very little risk, right? So I'm risking $400 on most of my trades. So this one, if I'm wrong, I'm going to lose like $160. I'm willing to give this a shot. This is also potential reversion trade too, right? So remember I talked about how and this will come back to the zone eventually. I just don't know if it's, so that's what this dotted line is. That's 1 ATR. Here's the 2 ATR. Here's the 3 ATR. That's the reversion trade I'm talking
Okay,
about.
let me give a counter. Okay.
Yeah.
I'll tell you what I'm seeing. Now I showed that 30-minute chart earlier. Okay. And I said, okay, something has to change here because we had the NQ trading above a significant inflection point, the ES lagging. That was not going to continue. That divergence has now been erased. Now, also from an auction market perspective, this market is trending higher. I'm looking over here on my daily charts, and the range so far today is fairly narrow. So unless this thing reverses rather sharply, to me, the path of least resistance is definitively higher. Now, let me go back to the profile graph here real quickly, Scott, and show something else.
Sure.
And this can be really, I find this extremely helpful. Again, I don't rote trade the market profile graph. Let's see, where are we here? I gotta find. But there are times where it's such an incredibly powerful.
So what I was showing there too, just for your audience. So I have 10 different live accounts set up to different strategies, right? So that was just one of my strategies.
Hey, I can relate. Yeah, no,
right. So that was called the Sexy Gexy. So I took that shot. That was the trade for that particular strategy. I have other strategies where I would force that stop run we just saw to show its hand, meaning push an ATR below. That didn't happen. So I didn't have any other shorts on. That was one of my strategies I put the trade on, right? So I have 10 different accounts, and you can see them on bookmap. I'll show when I share again, that are attached to my different strategies. So that was my sexy Gexy. It was a great risk reward. I was risking very little. If it worked out, it would have been awesome, right? So that's what I just did there. So I haven't done anything else.
No, I don't want, yeah, Scott is a professional trader. He's trading different strategies and different accounts. I've said that many times. I'm trading, I'm doing this prop shop game stuff, and I'll be long here, short here, using this strategy here, this strategy there, which is ideally suited for, but that's another topic for another time. We're trying to teach real trading concepts here, not gamification of the prop shop thing. But again, an entirely different subject. It's a lot of fun. All right, hold on a minute. Let me try to get this thing. Share. Okay, now here we go. Okay, so this is the profile graph. Now I've done all this statistical work, and I continue to do all this statistical work on what happens the first hour of the day, what happens in the first half of 60 minutes of the day, et cetera, et cetera. I did this in my book that I wrote in 2008 or 2009 and broke it down. But now with AI, and I use Claude, you can do incredible analysis. Now this is the first rotation of the day. I promise you, I can guarantee this market is not going to go up at this rate of change all day.
Can't see your screen, Tom. Someone just told me I can't see your
screen.
Oh,
you don't see my screen? I'm sorry. All right, now you see it?
Yeah.
Okay, so this is the first rotation today, okay? And we're not even, well, we're about to end the first rotation. Second rotation is going to begin. Now, I know this is not going to continue at this rate of change. Now, the market may go higher all day long. The market may make higher lows on a 30-minute chart in this rotation all day long, but it's not going to go at this rate of change up. However, I'm not going to stand in front of this based on everything else I'm seeing at this point in time. So at this point in time, I'm trying to figure out what kind of day is likely to be developing here. Well, number one, can't be ruled out that this is one of those trend days where the market, if I can get this thing to split out. I can't get it to split for some, oops, sorry. Okay, there we go. So now we're in the second rotation. Now what I want to show, yesterday's a good example. We had from this low here, this was the the crash, the great crash low of 629, and then we traded higher all day long. Scott, you and I talked about this. This is about as vertical a move as you're ever going to see without any rotation. But when I see a market that goes this vertical, I'll start shorting it just because I know there's going to be rotation. And now, if I had started shorting it in here, you got to be willing to add to the trade. Then you get stuck in here, and you're lucky if you get out with a small loss. Okay. However, there are times where, especially when you don't have this craziness where we went straight up. This was the open yesterday. We went straight up, then we went straight down, then we went straight back up. It's just nuts. So that's not a great example. Let me see if I can find a better example. There's one. That's not it. It doesn't happen often.
So I'll show this too. That this is a perfect example where you just said, I don't believe this rate of change is going to continue. So I took while you're showing your screen, of course, I just took a reversion trade. I'll go over that here. But it's just a great example of, not that you're just guessing where it's going to stop, but what just happened here, which I'm going to show when I take over again. This was what I'm saying is you can use your thesis to say, okay, this rate of change isn't going to continue, very unlikely. And now here's my setup to take this short. So I just literally took a reversion short back to the zone. Some of my room just took it too. So I'll show that when you get back on, but it's just a perfect example of having a thesis, and then you get the setup and you put the trade on.
Right. Well, this is when I find the profile graph to be a great visual reality check. There's a lot of information here. Now, this low is going to be important because this low should hold now if this is going to be a trend day. Now, if it comes out, it doesn't mean it's not going to be a trend day, but it lowers the probabilities. Now, if this thing continues higher into 1:30 or 2 o'clock, I'm going to be jumping all over myself trading it from the short side.
Right.
Now, those are relatively rare days because the market at some point is more likely than not to become rotational in this area, even if the day is going to be bid all day. And the other thing, Scott, and I'm sure you're aware of this, we're in one of the most seasonally positive weeks of the year. I'm also looking here on bar charts. I have the ES, the NQ, the YM, the Russell up. And the day session ranges, if you're looking on a 1-minute chart or 5-minute chart, it looks like, oh, wow. Well, there's really, we're well inside 5, 7, 10 day, whatever number you want to use, ATR so far in the cash session. So there's plenty of room for this to run. And I think the big one of the favorite strategies out there, Scott, and you can speak to this, and I want to point out, this is not what Scott is doing. It's not what he's doing. He is strategically sniping areas when he sees these levels of extension. Okay, that's different. There is a set of traders out there that dollar cost average. If the market's moving up, they're selling. If the market's moving down, they're buying. And a lot of them, what they'll do, they'll take VWAP, volume weighted average price, and then they'll put standard deviation bands. If it reaches second standard deviation or first standard deviation, they just start fading it. That will work, I don't know, 7 or 8 times out of 10, but the 2 or 3 it doesn't, you blow up your account and you lose everything that you made in those previous 7 sessions. I know this because I've done it. Scott can tell you, I'm sure Scott's done it. So you have to have structure behind what you're doing. Scott has a specific strategy that he's using to fade situations. And if it doesn't work, he's out and he's working something else over here. That's really good trading when you can put together different strategies for different market conditions. And again, that's why it's so important to understand this auction process and what's going on. And it's working in all degrees of time all the time. Scott is taking one slice of the auction process and trading it using that specific strategy, the trade that he just discussed. All right, Scott, you take over and show what you want.
So yeah, that was one. So let me show you what. And now I'm long. I was short. Now I'm long. Different strategies. Such a pain in my ass. Get here eventually. All right. So while you were talking, so I tried that sexy Gexy, right? So also when the market doesn't do something it should do, meaning this should have reacted Gex1, this should have reacted here. We had a stop run. That's usually a fade because it's just guys puking. It's not initiative buying, right? And then I showed the real-time Gex levels here, right? This is just a difference. It's called Gex AI. This one's pretty cheap. It's $50 a month. And it blew right through, the QQQs blew right through this. The SPY blew right through it, right? So this is actually where dealers are loaded. Usually you'll get some kind of reaction. For this just to blow right through here was telling you something. Now you can see we're running into some Gex here. So that's one way of looking at it. The other way, spot gamma as far as the Gex levels here. So this is their trace feature. And you can see this is an important area here. You got Gex level, almost 99% Gex level. So anything over 99% is very powerful. This could be a stopping point, like I tried to take the first time, but just be aware of where these areas are. And you can time, this is, you can pull this in and out to see how it's come in over time. So this, again, this is a whole nother webinar, but you just need to be aware of these areas. So this is kind of the same look here, and you can see the stuff coming in right here. That's the same look on a different platform. So anyway, I originally took that sexy Gexy. So what I'm talking about here is I'm just talking about my different strategies. So that was, yeah, the stupid Zoom thing's over the top of this. I can't see this. There we go. So this was a trade I took right before I gave you the screen, sexy Gexy. And this is where I jump in right in the middle of the zone, or right above it in that case. Take any fade trade into a spot gamma or method cube gamma level. Trade is taken immediately when an opposing SI event fires off. We saw the stop ice or the sell ice earlier. Then we saw the Dumb and Dumber stop run. It's one of my 6 distinct stop iceberg events. Dumb and Dumber is the dumb money's puke. Usually pukes are the stop runs are dumb money. Again, I'm a dumb money too. It's a retail trader. It's not the in-forward money. Market moving higher with buy stop in this case. I did not look out for that, but that wasn't the case. You want to be very careful of the relative items over 200%, so you don't get run over. But I still got run over on this. But the point is, yes, it felt terrible. Yes, it was a loser. I knew we were here. Here's my volume event. I took the trade. I put it on right here and took a small loser. Then what I did, I had another strategy. This is called the reversion strategy that happens all day, every day. Just another strategy I look for. I took a short on that one. That's this, right? It wasn't A plus, we'll go over these, but it was just a reversion trade because these markets have this ridiculous propensity to come back to these volume events. So what I was saying is when you were talking, you're like, that rate of change can't continue or shouldn't continue. So you know that with your experience, and all of a sudden you say, okay, we're at the 2 ATR reversion, and this is called the reversion dream. This again, I'm getting kind of technical here. What I'm showing you, this is market pulse. So this is just showing you order flow in a different way. So at this time, this is why this is lit up with stars. It got to this reversion. This was the 1 ATR reversion. I didn't put that on because I didn't get one of these. But this was an example of a reversion dream. You saw, this is the price change out. Again, I'm just jumping from things, and we'll go over this as we get in. I don't want to confuse people. But the point is, I had a signal to take my reversion short there. And we were into another GEX level, right? So I tried the sexy GEXy short there, didn't work, got stopped out, right? And then for the reversion trade, which is a whole other strategy, I knew we were at GEX 4. I had my reversion. We'll go over this when we get a chance. And I took the trade out. I got out of a couple here because this was the GEX 1. I got out of here, and that's P&L. So that was while you were talking, I took that quick scalp. And then I took on another strategy, I'm long. It's called the Bark Lick. It's blind ATR retest confirm. What is that? Well, I want to take advantage of wherever these events, because it's the best I've ever seen. So I want to take advantage of it. So this is when you don't need an important area. I just need to see a certain pattern. Well, what's that pattern? When the market, so the B in the Bark, it's Bark. That's the acronym, right? The B stands for blind, meaning I'll take this trade anywhere, right? I just need to see the volume event. A means it pushed the ATR out of the zone. R means it retested the zone, the same trade that I took advantage of the retest. Then confirm means it moves back out. So I got in right there. You can see my entry, right? So I'm long bark right now, right? So that's this strategy. So the point is, that's right here. Blind ATR retest confirm. The point is now, so say you're breaking out of times like this looks like, remember you said when I took the sexy Gexy long, well, I personally want short here. Well, this is a good example of, if you are, you're breaking out of a balance or you're breaking out of market profile composite and you get this Bark Lick look where ATR retest confirmed, well, you can say I'm trading this double size because the real-time volume event pattern matches my thesis, my guess of what's going to happen. That's all a thesis is. Now I'm going to trade that bigger size more than I would just trade a normal setup. You see what I'm saying? So that's what I do. I'll take the trade. Like I took the sexy Gexy. I felt terrible. I lost on it. Don't know what's going to happen next. I took this reversion. I got the parameters I needed to took it. Now I'm long the bark trade. And I could trade a double size here. For me, this is a little too far from this balance area to take double size. Yes, it looks bullish, but doesn't mean it's going to keep going right here. And this is a pretty decent move, right? If we were just breaking out of that and I got the Bark Lick, then yeah, I could trade a double size. See what I'm saying? Or say, this would happen all the time, say this comes back here, this directional conviction, this little balance from yesterday, say it does one of these, and I get a bearish stop iceberg event. Well, now I have a thesis, fail balance breakout, and the event shows me it's bearish. Now I'll trade double size to the short side. See what I'm saying? So I'm just looking for my important areas, my strategies. And then if my thesis matches the real-time volume event, which is the most important thing, right? This is the inflection stuff that's happening right now. Then I trade bigger. And that's all I'm doing all day long. Again, this is not for, traders that come in my trading room or learn my stuff. you're not, these are my strategies over 25 years, right? So you're not going to come in here and take every one of these, pick one or two of them and say, that makes sense to me. I like that bark trade, or I like the pick trade, looking for a volume event and a market profile composite, right? So that's what you do. You don't try to trade all of them, right? So great example here is if this ripped right through here, that was telling you something, by the way, and those are basically those X levels. So say this rips all the way up here, market profile composites. So the way I trade, and I'm not sure if you use composites or not, Tom, I'll merge the
What, you
days.
mean on the profile graph?
Yeah, so I'll merge the days.
No, absolutely. That's one of the primary things that Don Jones brought to the table of Settlemeyer's work. Settlemeyer took each day as a discrete event, and Don recognized, well, there's a constant auction process involved, and each day is a piece of a bigger whole, and you better know what that whole is doing.
Exactly. So like this composite, so these all I do is if they're single days and they overlap by more than 50%. So this day overlap the value area, which is just where 70% of the trade is occurred that day, right? Again, like Tom was saying, statistic wise, it's just a statistic turned over. That's what that is turned this way, right? So this is where 70% of the trade occurred, whatever they call that in statistics. I haven't been in statistics course in about 30 years. That's where the most of the trade occurred. And then the point of control is the price that traded the most, right? So if these days, the value areas of single days overlap, and then I merge them, now you have yourself, it's called a market profile composite. Now you have yourself extremely powerful areas, right? So does that mean so this is a great example. So when this market opened up, I know this is an important area that it can bounce off of, kind of like Russell bounced off it yesterday. I showed that on that here, right? Like this one. So like this one yesterday, this is what I missed. Remember I showed this earlier? So I know that's an important area. And then you get the volume event that proves bullish. It's go time. This one this morning, did you see me just jump in a short on the market profile composite? No, because I got the volume event, but did the volume event prove bearish, right? So that was right around 235 was the bottom of this profile composite, right? So that was, let's just take a look here. That was this. So did you see me when it came to that market profile composite? Did you see me just jump in when this fired up for that strategy? No. Why? Because I wanted to show its hand. It needed to push the ATR out and then some, 15% of an ATR. That's the yellow line. And then I would have gone short. So you see, this is why I don't just jump in these areas until I get my confirmation with the stop iceberg information. That was that stop one right there. I never went short that strategy because it wasn't able to show its hand and push out. Yesterday, you saw the Russell did push out.
I want to interrupt because what you're saying is so important, and I don't want it to be missed. You have triggers for your trade idea. You're not just blindly plunging in.
Right.
You have triggers. You're waiting for some market confirmation.
Exactly.
That's so important.
And my confirmation is this, right? So that or the volume event. So if I don't get a volume event and it doesn't show its hand, meaning for my rules, I don't put on the trade. Again, this was a different trade, a different strategy. That market profile, I call it profiles encouraged. And Tom should know this. He was around with JFK when he wrote his book. Again, these are supposed to be memorable and funny. That's why they're profiles encouraged. Take any trade that moves into or out of a market profile composite, high or low, right? So that was a market profile composite low. I didn't take the trade because the real-time volume event didn't prove bearish. And that's all I'm doing all day long. And then the other thing too, very, very good for a thesis is you want to look where this heavy resting liquidity is. What's heavy resting liquidity? Well, all that's showing you is where the biggest orders are in the order book. The markets have a ridiculous, speaking of, there's a queue, I'll show you soybeans. I saw it overnight. I almost put this trade on overnight. So anyway, what I was saying is the markets, these are magnets, right? It's not, novices will come in here and be like, oh, it would be like band of liquidity, which are just big orders in the offer, right? In the order book. They're like, oh, someone wants to sell. I want to go short. No, it's the exact opposite. The market is going to make it up to this liquidity. Is it going to happen right this second? No, it can drop 300 points. I will promise you the odds, I should promise, but I would put it at about 99.9% that this gets filled today. Well, why does that help you? Well, because it gives you a thesis on where the market's probably headed. Once they get their fills, then it's okay to go this way. And how do I know that? Because this is the game I used to play, right? So what I teach is based on my, experience as a huge scalper back in the day. I used to load up, and again, this was the mini. I used to load it up. So this would be me. I'd have 1,000 in there, right? And then I would start tagging the order book, just small orders to see how it would react. I'd buy some, it'd go up. Okay, buy some more, it'd go up. I'm like, okay, now it's go time. Then I would just lay in and I'd be buying like crazy. Then you can obviously see the orders trading. Then I would get traders coming on my coattails like, oh, look, someone's buying big. They would jump in. It would run. So I'd be loaded up. I'd have, 1,000 on and would run right in my offer and I'd be out of the trade. So this is all I would do all day long. So that's how I know the games and I know what usually happens. So these guys want their fill. They're the big money. They're going to get their fill. It might happen in the next 5 minutes. Here's a good example from last night. And I had to literally, I'm like, don't do it because I don't sleep when I have positions.
Don't do it. Don't do it.
Don't do
Yeah,
it. So,
go to
so
bed.
this is I leave this book map running all night. So look at this liquidity in soybeans last night. It was so hard for me not to take this trade, especially, and this is a good example of paper's not always right. Hold on, if I can find the damn, here we go. Oh, that's wheat. Here it is, soybeans. Look at this. So this was last night. And I'm sitting here staring at this thing. This was right before I went to bed, right here. So someone came in, flurry of activity, buy ice, buy ice, buy ice. And I saw all these bands of liquidity. And I'm like, just throw it on, put your stop in. I'm like, nah, I talked myself out of it. That stuff. And I could have combined these at the time too. But the point is, look where it went. It tagged all of this liquidity below. So my point, and then look at above. So just coming up with a thesis with this. So every morning,
Nothing above, everything's below.
Right.
Interesting.
So could you
that's
imagine?
stark.
So you're looking at your stuff, right? You're like, hey, we're at an inflection area. We're going to break down on this market profile composite. Oh yeah, and by the way, all the liquidity is below. Now, if that's not an edge, I don't know what is, right? And then lo and behold, it goes and it's still filling all this stuff. It's probably going to fill all of it. Who is it? It's the big money. They want their fills lower. They're going to get their fill. Look at this liquidity below here. This is all. I'm not saying it's all going to happen today, but I promise you in the next couple of days, if this stays in here, every bit of this is going to get filled because that's the big money and they get what they want. So how does that benefit you? Because you know what they're doing. That's the key with using bookmap. You can see what the big money is trying to do when you know what you're
Scott, do you find this is even clearer in the commodities as opposed to the stock indices?
Probably
Stuff like gold, crude, wheat, beans.
You know why? Because there's just a lot of less underlying nonsense with the. There's only so many things that are driving the the commodities like the wheats and the beans. In here, you've got 50 different cross currents between ETFs and the individual stocks.
That's my point. Exactly. That's my point. You have
So
all
it's-
this artificial automatic flow in the stock indices now.
Right, exactly. It's definitely a cleaner trade, right? But it's a lot of days it's like watching paint dry, right? It's like the ATR. Let's see what the ATR is in here. Set up here. The ATR in here now is what 1.29. So that means it's rotating 1 cent, 1.25 cents, which is equivalent to 1.25 points in the mini S&P every 5 minutes. Like, yeah, it's great. If you want to watch paint dry, it's great, right? There's days it gets going, but yeah, it's definitely a cleaner trade if you're willing to watch paint dry most of the day, right? So, but the point is, you can see here, it doesn't matter what market you're trading. If you know the thresholds and the zone drawing tool draws them for you, right? And I teach those as well.
Validated.
If you know the thresholds, you can trade any market. So here's gold. There's not been anything. So I don't even look at a market unless they fire off. But there's days that the equities aren't doing anything. You come over here and trade. You could trade soybeans. You could trade wheat. There's been nothing here today. That was last night. Natural gas. Natural gas is a little bitch, as I like to say, but I mean it does the same stuff. Let's see. Copper. This is.
Yeah, short retested.
So he's saying ZS, not ES. There's been nothing in ZS bonds. There's been nothing in bonds today either. But the point is, it doesn't matter. Silver, if you get your event, threshold event. Yeah, there was a stop run here, and here you go. It's a perfect example. Here's a puke in silver. Like right now, I'd be potentially looking at a reversion trade. Or you could pull up your silver chart right now. Todd, I know you look at silver. If it looks bullish, well, this event just proved bullish, right? Take the ATR. Look at the liquidity. You see how this stuff all comes together. Like if you're breaking out. Well, there's liquidity below too. And again, you got to be careful. The more you zoom in, you find liquidity everywhere. So right now, there's actually more liquidity below. So there's going to be days that aren't clear either, right? So we saw soybeans, everything was below and there was nothing above. Here, you got liquidity above and below. What does that mean? Well, it means to me, it's probably going to be more of a choppy. Here we go. Speaking of liquidity, here we go. So this long's working fine. Here's a new event, and here's another key. This is how I trail my stops, not some area that I self-impose in the market because I want to break even. That the algos know that traders do that. That's why you get these whipsaw rotations. I trail my stop based on something that just happened in the market. So now my stop, I went long this, the bark trade that we talked about, bark lick, it's the same trade. We're about to tag the liquidity. It's like I'm psychic or something, or I watch this 80 times a day, every day, right? So here was my stop when I put that on. We talked about me getting in here, stop goes here. That was my position size. I put on one whopping micro. That's all I could. There was $400. Now here's a new event. Now I'm trailing my stop to this event, right? So now the worst I'm going to do is break even on this trade, right? And I'm about to get out of it into this liquidity that I, again, predicted in my Merlin the Magnificent predictor magician guy. I mean, I'm being sarcastic. I'm being sarcastic. It's just because I watch this all day long.
Hey, listen, my guys appreciate sarcasm because I hear it all day long.
The point is, there is nothing. It's just you're just seeing what the big money's doing, right? It's like, and you got to be careful too. Yes, there's liquidity coming in all over the place. This is these games here. The longer the liquidity's been in there, the heavier it's been in there, the more likely it is to get filled. And I'm going to pop out of this long that I put on. And the other thing too is you don't wait for it always to get filled. Why? Because what do you think is going to happen first time up here? Very likely. Do you think it's just going to fill? No, the algo. This is why firms use icebergs, because the algos will pick up this size. They don't know, they just see it's in here and then they run it away. So I'm going to see if we can get a little higher, but I don't have to wait for this to fill to get out of this long, right? And then I'm going to trail my stop to there. And then we start the whole process all over again. What area? Here's a volume event. I can take reversion trades. I can take position trades. I know this is an inflection zone and ISI zones. Again, I draw my inflection zones based on the stuff that I've learned from Tom. What are my inflection zones? So you see all these zones, I draw them every day. We're at the bottom of this one. I draw them so that the four important areas of trading of structure, tops and bottoms of balance areas, high volume nodes of balance areas, directional conviction, and gaps are directional conviction. This is all stuff I learned from Tom, guys. This is what I'm trying to say. Like he was one of my earlier mentors. And buying and selling tails, right? So, and then I draw zones. So you can see this zone was drawn here yesterday into that huge buying tail because it was a buying tail. It was a gap up, came down. It's exactly where I put the buying. This was telling you something yesterday. This was going to happen, right? So the point is now here we are in an important area. We have a volume event. If this turns bearish, I'm not short yet. I will get out of my long and do it in ISI short. That's just one of my strategies, right? Right here. Inflection zone trade. I should put TA Tom Alexander because he's the one who taught me the inflection zones. Take fade trade moves into prior inflection zones. And you want to be careful taking them if you're just breaking out of balance. But these are the best inflection zone trades because you get these huge moves. So all the energy is spent moving into these things. And like there's no buyers left a lot of times when it gets to these. Where you don't want to take first move into them if you're breaking out of a balance area, right? So for instance, like this was the balance area from yesterday with that ridiculous buying tail, right? Well, I don't want to just fade this first zone here because you got all these traders. Just use common sense. Anytime you're confused, use common sense. There's traders in here. How are the shorts feeling? Let me out. Do you just want to jump in an inflection zone trade, first move into it? No. So I demand, in that case, if it's breaking out of balance, I'll demand the ATR retest confirm like I do with my bark trade. But most of my ISI zones like this one, I'm going to take aggressively, meaning first move out of the zone. I will get short one because that me getting in here, me getting out of here, I'm risking $400. I know exactly what I'm risking. By the way, we're getting close to this liquidity, so I'm going to pop out of this thing. This gets anywhere near this. Let's see, we got another. And you can see the ATR is pretty elevated. It's not as elevated as that's, but this thing's rotating almost 60 points every 5 minutes. That's pretty elevated. But that's the great thing about this zone drawing tool too. It takes in consideration the volatility, the ATR, and the size of the zone to give you your position trading. So I know if I go short here, stop here, I could put on one and lose $400. So that just cures so many of the mistakes that traders make. By the way, this is getting closer and closer. I'm trying to give this a chance. Another thing I use too, that I've used for a long time, is tick strike. It kind of gives me the sound of these, like the underlying, the Mag 7 stocks and the, show you here. So I can kind of judge if it doesn't get up here, it doesn't have the power to blow through, right? So it's these guys here. So if these are quiet, like there's nothing behind it, and get out. Like here we go. So they're still buying it. My room called this too. Awesome work, guys. These are two of the Fab Four. So Nick called the reversion. He caught, that's the one I showed you that caught that reversion trade. And then Dune Runner called the Bark Lick. You know, it was a yellow brick road too. I didn't put that one on. That's another strategy, but good job. That's why they're the Fab Four. So you can see there was a little bit of liquidity that longer term here too, right? And it's kind of see how these algos try to run it away. That's why firms use iceberg orders.
He has short entered.
All right, I'll hop out here because I want to give the screen back to Tom if he wants it. I don't want to. It's close enough. I mean, this is granted. Don't get me wrong. This is another 40 points away, and I'm sacrificing for the team. I always make jokes in my room like, if they're all long and I get out, it's 100% going to come up here, right? If I hold it.
Well, hey, listen, I tell you know, I think it was yesterday. I swear, I tell my guys this all the time. I was looking at this market and it was just vertical. And then in the last, I don't know, it was like 2 hours, we stayed in like a 15 handle range. And I said, you know what? I don't know what's going to happen, but I guarantee you, we're not going to close in the middle of this. Well, guess what? We closed right in the middle of it. And I told him, I said, I can take the most high probability event and destroy it by
Destroy it,
just
exactly. I do the same. I mean, that's all I do all day long is bitch about me. Like I'll get out of a reversion trade early and I'm like, okay, you're welcome, guy. Like it'll be like one of these and I'll
That's
hop out.
right. Yeah.
I'll get out here
Or
and
I'll
I'm like,
go
okay,
walk
you guys
my-
are welcome. It goes right to the zone immediately every time.
Yeah, or I'll go walk my dog and the you know, the ES will drop 60 handles and have all this opportunity. You know, it's like
Right. All right. So then the other trade I got working here. So you see, this is my Izzy short. Let's see if there's anything else as far as my strategies to potentially go short here and or long. Let's see. So I use the inflection zones. I use this is not a dead, you know, I'm not going to go over all these strategies unless I put them on. You are coming to the point of control. I don't have a trade for point of control, but you are coming to the point of control here, close. And here we go. Right to this liquidity. You're going to watch. Very likely it's going to run away first time up here because the algos pick up the size and they are trying to front run these orders to make him chase. Little do they know this one's not going to chase. He's been in there this whole time. He's not going to chase now, right? But you can see it comes right here. They sniff it and they start to run away. They want this, and then they put all their bids in. They want this person to chase their sell, and then they get filled at a better price. That's the game that goes on. It's just one of the algos in there. It's not the algo, right? And then we have other algos here. This is what I was trying to show you guys earlier. So this is the price change. You can use all of this in conjunction. This is the price change algo, right? You look down here. So it's all in one chart, which is completely, I've been begging Bookmap to get this in tab form so I can switch between the iceberg stuff. But most of the time, there's algos in here that trade this price change when it moves too far, too quickly, meaning too many points too quickly, it snaps the other way, right? You can see here, it was golden. So this was the price change here, came back, price change there, came back, price change there, came back. So when the market dies and there's nothing going on in here, this is the algo that runs the show. So my point is, if you're looking to get out, all right, one, you see the liquidity here. It's very likely going to run away. Two, you see price change game coming in. You know, those algos like to snap it back. This is just all information to help you make better decisions at your areas. You're not doing anything different. Like Tom can take the stuff the minute he learns it and start to make way better decisions at areas that he's contemplating getting out, because the way he's trading, yes, he has the bigger picture information, but he doesn't have all the information on the stuff, why stuff may fail, right? Don't you think it'd behoove him to know there's a ton of liquidity here and these algos love to run away? Or say
that to me is something that I think is Well, it's the simple part of this. I think that's easy to understand.
Right.
It's
Right.
you know, it's
And what
just
I'm
easy
showing,
to
I know
understand.
it's a lot, but it's really not, I am not that smart of a dude. Trust me. I mean, I'm not the brightest bulb in the box, but I do see patterns. That's always been my gift. That's why I was able to take off the first time, right? But anything in trading, in my opinion, the simpler that you can make it, the better you're going to do, right? And again, this looks like this is all very complicated. It's really not once you know what you're looking at. You're looking at the volume events, you're looking at the entries, the entry spots and then reversion trade and liquidity and the GEX levels. That's it, right? So, but my point is, if you already have an edge like Tom does, if he just learned this stuff, he would be unstoppable, like in my opinion, because he already knows like what the market should do thesis wise. Now, when he gets the stuff matching up with what's really going on in the market, now, I mean, again, unstoppable. I've been begging him for a couple years to. He's finally watching it, but I've been begging him.
You're dragging me into your world, Scott.
Yeah, but I'm telling you, it's not complicated. It's really not. And this isn't a bunch of bells and whistles indicators. These are not indicators. It's showing you what's happening in real time, right? I mean,
Right. No. Yeah, totally. Yeah. I'm not. Yeah. I get it.
right.
Trust me.
Even this stuff down here, these are not indicators. This is just showing me this price change algo, whipping the market around. It's not an indicator per se. This is called the stop.
Now we traded up right to that liquidity, right?
Right. And it's struggling because they're running away from there. And again, if it just blows through this, what was resistance is now potential support. And it's telling you something, just like we blew through all these major GEX levels, it was telling you this was very likely going to happen. Now, when you take this is what I'm trying to say, like you're looking at your stuff, you already said, I would not short this market, right? Now, and then you see us blow through these levels that usually at least have some kind of reaction. You're like, now it's go time. I just with the GEX stuff, right? I'm not even talking about the stuff iceberg. So you can use all this stuff to help you with your confluence and saying, okay, my thesis, my guess on what's going on here is very likely going to work out.
Okay, so now from a profile perspective, and I'm looking on a 30-minute chart, but it's effectively
Let me give it back to you.
each rotation. We're straight up, continued. So the idea that this could be that trend day, and we're going to make higher 30-minute lows into this afternoon is still in play.
Right. You want to show your screen again or no?
Sure. Yeah, absolutely. Let's see, pull this down. Okay, so first we'll look at the bar chart. So you can see it's just higher, higher, higher. Each rotation, each 30-minute rotation. Oh, you can't see it?
Can't see it. Try it again. Listen to me, hold on. Yeah, I just see you.
You see it now?
Nope. Just click on the share. You should be able to see.
I did.
And then
It's
different screens.
Showing. Do you guys see it?
Oh, wait. I'm sorry. Hold on. There it is. My bad. I told you.
Okay, so you do see it.
I got it.
Okay.
Sorry.
All right. So
just keep you on your toes.
Look, no problem. Higher low, higher low, higher low. This still has all the earmarks of the stopping price hasn't formed. The rotation really hasn't begun yet. That's important information. That's macro information. Now let's look at the profile chart over here. And you're going to see the same thing just from a different perspective, just from the profile perspective. Okay, so here, this is the profile graph that we started talking about earlier. This is the first half hour, second half hour, now we're in the third half hour. So, and then we want to look over here and look what's going on in the cash market. Where are we? So here's the SPX. This was a few days ago, Scott. I'm sure you probably noticed this. And this was your point about, now this whole structure was important, but look at these closes here. You knew something big was going to happen. So we opened here, we came down and tested it, and I bet you $1 billion you had one of your levels here, Scott, yesterday.
Yeah, I'm sure.
You know,
There was really
there was
nothing in ES though until the very end of the day yesterday, which is it was pretty surprising. I mean, there hasn't been a lot in there lately, but right at the end of the day, and then stuff starts firing in like icebergs and stuff. But yeah, I didn't get anything down there yesterday. So for me, like I wouldn't have traded it, SPX. There was a bunch of stuff in Nasdaq as usual, but
right. So what I'm seeing here, yesterday was a pretty wide range day. Well, today is not particularly wide range. There's a lot of potential left in today. So everything from a macro level is telling me this market is still really, really big and is unlikely to have a dramatic reversal at this point. Now, what would change my mind? Well, what would change my mind is if we start making lower lows and lower highs. If you want to just go, you can go to a 1 minute chart, you can go to a 5 minute chart. That would change my mind. But unless that happens, I'm going to have to give the benefit of the doubt to this market to the upside, unless we run straight up into 132 o'clock and we haven't had any rotation. Then I'll get more aggressive taking shots on the short side.
Yeah, that's what I'm saying. So you already have that in your mind, right? And then you can imagine you come back from lunch, you put it on, all of a sudden you see a stop iceberg event that turns bearish. You're like, it's go time. And then you know exactly where to get in, where to get out.
What I think that would help me do is size it up.
Right. Oh, absolutely.
Yeah, because you're getting confluence of information there.
Right. I mean,
how's your golf game?
It was pretty good. I played TPC Stadium where they play the Waste Management the other day. It's in horrible condition. So if you guys are coming to Arizona, do not pay the whatever the hell they're charging there. It's way overpriced as it is. Terrible condition. They they had some kind of virus or what do they call it? Not virus, but point is don't overpay for TPC. But anyway, I played like crap. I play in this golf league. It's called the Scottsdale Golf League. It's like structured after the PGA. It's very, very intense for old guys. You know what I mean? It's like all we got left is early competitive.
I play old man tennis nationally, so I can.
Oh, nice! But you got to be good then. But it's important, right? Like it feels just like when you're a kid. I mean, it's just as important when I play in these golf events. It feels just like when I was, playing baseball in high school. It's like you don't want to lose. Right?
I'm just as vested in it as my son is in his college matches. Now he's graduated.
Right. That's what I'm saying. It's like people laugh like because it's old guys, but it's extremely competitive. Extremely.
Oh yeah, and I'm 72 years old, but you would not believe how good 72-year-olds can play. I mean, it's unbelievable.
Plus, it keeps you in shape.
Really high level, a lot of fun. Oh my God!
The competitive side of it, it's like you can't go out there and make a fool out of yourself, so you got to stay in shape. So it's just a way to keep you,
right. It's a way to keep you motivated for the bigger picture.
Right.
Nobody 72 years old is going to make any money playing tennis.
Right.
But there's a big, there's a bigger picture here.
Right. All right, so you see, this is exactly what I'm talking about, right? It came up here. These algos sniffed the size, said, "Yeah, let's run away." It doesn't mean it's not going to come up here again. It probably will. They're going to. And again, this was the game I used to play. Like I said, I would make it. So it's actually embarrassing they couldn't push it up here. What I would do if it got that close, not only would I start buying, then I would just layer in, and this is illegal now. It's called spoofing. I would just put in huge orders to make them think twice. If someone wanted to sell it, they look down, they say, "Oh, there's 3,000 there. I'm not okay. I'm not going to sell on that." And then I had no intention of trading it, but it was to scare the market into my resting offers to get the hell out. So spoofing's illegal now. I do air quotes because they're still spoofing. But the whole point here, guys, is to understand what is going on instead of getting mad, right? Saying, the algos are, you can't make money in these markets. They're the big money.
They're out to get me.
Right. You can see what they're doing, right? So it's like that's 3/4 of the battle, right? Trading's still very, very difficult, don't get me wrong, but at least you can see what's driving these markets, right? So that ran away from liquidity. Let's see what the GEX levels look like here. This is GEX AI, and this one's a cheaper version. I don't know how they get this information because I know Spot Gamma pays like 50 grand a month for it. Let me show you something else. I will promise you, I don't even have to look at it. I already know what I'm going to see. This is the euro, There you go. So you see here, you will be shocked most days. Again, the big money comes in probably 5% of the time. The other 95% are these algos that I'm showing you and this options flow. So what is this? This blue line is the options flow. So somebody is loading up the dealers. The dealers are the ones buying. The dealers have to come in the option or in the futures and hedge themselves, meaning they're selling. So you will be shocked on how this most of the time, again, nothing's 100% because when the big money comes in here, but look at this. The minute this thing starts to turn, the market turns with it. And this is like Tom said, this is the dog wagging or the tail wagging the dog. It's not the other way around. This is not driving this. This is driving that. And you can see. So don't you think it's important to know, hey, this thing's moving. This just moved 1.4 billion notionally. That's a lot, right? According to Brett from Spot Gambit. I've done webinars with him. Go to my YouTube channel. You can watch him, see how he interprets stuff. And he's got his own channel, obviously, spotgambit.com. Anyway, even the little blips here were the same blips here. This is driving that, not the other way around. So you need to know, okay, I might not want to stand in front. By the way, still got my short working here. The Izzy inflection zone short that I was talking about. But this moves like a market too. Don't get me wrong. It's hard to predict what's going to be the next flow. But my point is, if you're seeing, first of all, that's usually a signal. Like right now, like up here, if we would have got that flow alert, I have a trade for that called the flow bee, like I was saying, where it usually reverses the market. It means a big options order came in and it usually flips the other way. But the point is, you just want to know, especially if this thing like goes negative and you see like negative 5 billion, 6 billion, 8 billion, and you can see here, it even tells you for the last 30 days what's lots. You don't want to be, if the thing's minus like 10 billion, you don't want to be going long that day, right? And you can imagine, like, if you can see minus 10 billion and you're breaking down out of a balance area, now you, again, just another edge that you can have. Let's see here.
Scott, I want to ask you a question.
Yep.
I'm looking at the ES here, and I'm looking on a 1 minute chart, and there is a very pronounced volume node, and we broke to the upside out of it. And the point of control is probably 75.23. What do you see on 5 handles either side of 75.23 right now? Is there anything there that would be telling, that would be an identifier other than this, this node that I see on a bar chart? You see what I'm talking about?
Yeah, hold on. Yeah, hold this up. So again, I guarantee the hero's flipping back up right now. So this just moved from third. It's only a 5-point move, but watch. There it is. It's you will not believe this, guys. You've got to know this information. You can put this on next expiration, 0 date to expiration. That's this greenish or whatever color that is.
Now, what you're showing here, this is not bookmap. This is a different app.
Yeah, this
right?
is Spot Gamma. Again, I put it in that flip book. You can use the that code. You get 50% off the first month, but it's well worth it because again, this is the newest game in town. So what they're doing now, and again, this came from one of the, and of course now it's going to freeze up on me. But I used to be one of the biggest manipulators in the market. It was legal what I was doing back then. It's not legal anymore. But what they're doing is, I can pull this up another way too, but they're loading up the dealers and they're making the dealers buy the futures. So just think about it. It's like back in the day, if I knew this game and the options were nowhere near as big as they are now, I could put on 3,000 in my heyday. I could put up to 3,000 E-minis on at one time, right? Well, if I'm out of bullets, now I could come and start buying some options and load up the dealers and then they have to buy the futures, right? So this is the newest game in town that you've got to understand. And right around this time of day, right around 10 o'clock central, and that's right when the manipulation used to start with this other guy I used to trade against. It was like a poker game back then. He waited for New York to go to lunch and he'd start his game, right? New York and Chicago, they're doing the same thing. So most of the time, and this, don't get me wrong, this thing moves in its own right. But that time of day, you get the real manipulation. Hold on, I'm trying to get this back up. But what were you asking me? What do I see here? As far as all I'm seeing here is these GEX. So where did you say your nodes are?
This is around, say, 5 handles on either side of 75.23.
So right here is important.
And we're rapidly crashing into that volume.
Right.
If that comes out, for me, that's a real heads up.
So
Just
now
looking
think,
at the
so
bar
think
chart,
about
there's
right.
got to be something there.
So think about what you're saying, right? So you're saying based on structure, it looks like if it crashes out, it's going to get killed. then what do you see here? You see some major GEX levels. If this stuff goes, that's telling you something too. So these are like what was resistance as this market ran into it. And it didn't seem like much resistance at the time. It did blow through there. Now it's support. If these things go, the dealers are, it's back below these areas, these GEX levels, very important to know, right? So you're using your information with the options, and that's just the longer term stuff. And let's look at this. This is just another way to look at the 0 day to expiration ridiculousness. You see, look where this pause. This is SPX, right? So if this breaks, so again, say you're using Tom stuff, right? It breaks this area. One, this is you see how this all came in. These are where dealers are loaded up. Well, if this breaks, very, very likely the next move down is to this. So you can use this as your target. That's 20 points away, right? This just and this is what this is doing, by the way. This is just AI, but it's judging on how, the thicker this gets, the more activity was here, the more it's a magnet. Remember, we talked about the heavy resting liquidity? Well, this isn't resting liquidity because this is actually trades that went up, but you would be shocked on propensity for these markets to come in these areas. The flip side, say this gets back above here, then I would be looking for that.
All right, we're coming right into it now. It's going to be interesting to see how it behaves. We're at the upper cusp of that volume node, as defined by just the bar chart. I'm not looking at volume. there's got to be volume there because there's so much overlapping activity.
Are you looking at the bar chart for 5 minute or what are you looking
Yeah,
at?
I'm just looking at a bar chart.
Yeah, so what I see is the balance from this morning. Attempted breakout. Here we are. Very important inflection area, the high volume node of today's balance, correct? Is that what you're referring to? Pretty much.
Yeah.
Right.
Yeah.
So again, you see that, then there's a bunch of really important GEX levels here. You see there's a big GEX level below that's filling up. If this breaks, very likely going to go to that again for a thesis. That's all we're doing here. I for instance, see it's already got through this guy, which is basically the high volume node of that balance. That's the next, that's in my mind. But the thing is, I am not personally trading this unless I got a bearish event. Then I would trade it. That's just how I trade, because for me, and trust me, the options are becoming more and more powerful. It's a very close second to stop iceberg events, but I would not trade anything here until I get a stop iceberg event and it proved bearish. Then I would trade it, right? Other than that, I'm not trading this particular market right now. And that's just me.
Okay,
I may change in the future because you've always got to be adapting in your trading. Right.
Right. Each new print is more information.
Right.
Now, speaking of that, all right, I talked about what's my macro view of today. So now we've traded very deeply into today's range on a relative basis, especially if this is going to be a trend day. So what this has done, it's decrease the probabilities that the market's just going to run away to the upside because of the depth of this retracement.
Right.
And now what comes into play, it opens up the playbook. We could have a heavily rotational day. Well, we could even have a reversal day. But the idea, and we could still trade a lot higher, but the probabilities are less now than they were prior to this relatively deep dip into today's range, that we're just going to run away relentlessly to the upside all day long. Because if that were the case, they wouldn't have let it come back this far.
Right. See, and what I'm seeing,
they could
came back this far.
I should say they couldn't have let it come back this far because the buyers would have just been, that panic bid thing would be in play.
Right. You can see here. So this was this was a 20-point move. Right. Again, I did nothing on this, and I still haven't got filled on my Nasdaq short, by the way. This was this move, guys. I mean, look at this. It's incredible how much this runs the show. Here's that, 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 here's that. It's unbelievable. It really is. Like, again, I was one of the biggest manipulators on the planet at one time. And for me to be shocked should be telling you something. This is the game. You've got to know what's driving these markets. Again, this trades like a market too. Don't get me wrong, but you can learn, okay, hey, that again, if this gets below zero, and then we start breaking, and we're in negative. So this is what I was trying to show you too. So the biggest notional this has been over the last 30 days here has been minus 16 billion. And this was, I think, last week or the week before. So my point is, right now it's basically right around zero. If this gets like -5, 6, 7 billion, well, they're firing, on the options, they're shorting options and the dealers are on the other side. The dealers have to hedge. So you could just say, okay, anything under 5 billion, -5 billion, I'm not taking longs today. Or use that information and you start breaking balances. Now you have, again, you're just using confluence with the stuff that's driving these markets. You've got to know what's going on with this other stuff. And it's not that technical. It's not an indicator. It's not, you're just looking at what's driving the order.
It's information to be
Right.
interpreted.
But it's the most important information. I'm about to get filled on this Nasdaq short, by the way. But it's the most important information that I've seen, right? Between the stop iceberg information and the options data, it's the most important information you can look at. By the way, this is exactly what I'm talking about, right? So you were long up here, you were long, thought you had it. Yeah, I got it made. Well, first of all, this follows the hero exactly too. Even though it's the SPX, it's insane. Here's my entry for that short, by the way. But how much, if you don't have this information, you're like thinking it's going to the moon. If you do have this information and you're on the webinar and you were long, you're like, all right, Scott's getting out of here. I'm gonna get out of somewhere. I'm gonna get out of them because it's not pushing through this heavy risk and liquidity. This is what I'm talking about. You don't have all the information if you're not watching this stuff. So you may still be in this like, damn it, I just gave back 125 points, right? I got out of my long. Now I'm about to go short. Should be that fill here any second. And I could take reversion trades here too. So this is a good example too. If this is a high volume node, let's look from the 5-minute chart. Pretty close. This is an uglier balance, but it's still balance, right? Like, I don't trade off 5-minute balances. It's good to look at. We're here right now. So you could say, that's what I'm talking about. You can use that information.
Yeah, that's the exact, we're right in the midpoint of that balance area now,
right
in the ES.
So this might not be a bad reversion trade. And like I talked about, all these markets come back. And by the way, this is just drawing to this ugly arm. You got to get used to it. It's brand new in the zone drawing tool. No one has it yet, except for my room just got it today. I just filled out my short. But this is just telling me this confirmed bearish. See how it tagged the blue line? So this is a bearish event. That's why I just went short. I can still take reversion trades here too. So again, this is more of a scalp trade. One, I know we're at the high volume node, so it has more of a chance to bounce here, right? I'll take the reversion long coming back. This is just another strategy. You may not want to take reversion trades, right? This is my sizing for the reversion 1.3. This is risking $400. So if this holds right here, I'm going to take the reversion coming back. Put this in here. This is just the one.
If we go too much lower, what I'm showing on my chart is sort of an elevator shaft. You've heard me say that before, I'm sure.
Mm-hmm.
And I'm not seeing, once you get in those, and what an elevator shaft is, it's conviction. And as we know, and here's my theory, and you can please correct me if or expound on this. So if I see like a 1-minute bar, it goes straight up. It is effectively, in market profile terms, quote unquote, single prints. Okay, because there's nothing but on either side of it, right? That's what single prints are. Well,
Right,
it took
no
conviction.
structure. So what people are
There's no right.
Meaning trap traders, right?
So, right. So
There's
if
nothing
you
here.
get into that area again, it's the top of that area, the beginning of that area is a major inflection point.
Right here.
Because the people that created that area are either going to come in and defend it, or you're going to get a very sharp move all the way through it.
And that's the best position trading is the failed balance breakout. By far,
there you go.
The most powerful position trading is that. All right, I just put on 2 of the 3 here. So this is a great example. We're at that high volume node of the 5-minute. So you could use that for the reason so I have 2 different reversion trades. You can take them aggressively. That's the 1 ATR. That's the 2. That's the 3 for this trade, right? You can take them aggressively as the market moves into them, or you can wait for it to bounce. See where this bounce? Right off X1, which just happens to be the high volume node of this 5-minute balance area, or pretty damn close, right? So you can see how this stuff, when you get this stuff, now you have an even better edge. There you are.
Yeah.
That bounced off X1.
From my perspective, right now, and I'm looking at the ES, the MES, this thing is either going to bounce strongly from here, or it's going to crater into the next volume node that starts at about 75.10.
Right, and you don't know what's going to happen. So this is the point. Like I'm short one strategy. Right. I got my Izzy short on inflection zone short. I've been waiting all morning to get filled on. Right, And I just put on the reversion trade. So this is the stop for the reversion trade. I just moved a little bit below here. So that's what you're seeing here too, by the way. Like I said, here's the 180.
Absolutely. And, you know, something else here that's implicit in what Scott's doing. He trades different strategies in different accounts. And that's the highest use of this. And that's one of the beauties of understanding this auction market process, because you have this auction process in effect in all degrees of time all the time. So you can be short in one time frame and long in another because of different structures in those different time frames.
Right, exactly. But yeah, you can see here. So I have, these are all, and I still have Apex, right? When I got back in the business, I didn't have $200,000 to throw in a trading account, right? That's why I got out of the business, because I couldn't make money anymore, right? So I was trading Apex, still trade them, but I copy them. I copy those over to here. And that's the best thing you guys can use if you're learning, like I say, you want to learn my stuff or Tom's stuff. There's no reason to be risking your own money until you know what the hell you're doing, right? And the beauty of those,
these prop shop accounts are cheaper than an option, Scott.
And if you do, so you get a way to practice with skin in the game. And if you do well, you get backing anyway. So it's like then you're funded. Granted, the rules are very, very, very stringent, and it's for a reason, right? Because they make money off more of traders failing than making money.
They're not. Again, I don't want to get into the prop shop topic, but it's a game into itself. But you got to know their rules, because first of all, they will seldom reward you for letting a market run beyond a certain point. They don't want that.
Right.
So you have to be careful. But anyway, that's again another topic for another time.
So guys, look at this is what I'm talking about. This is a very, very large options notional move. This went from plus 2.5 billion to minus 1.2. That's exactly why this did what it did. These options dealers are on the other side of this blue or purple line. They're not directional traders. They have to hedge themselves. Where are they hedging? In the futures. That's why this just did what it did. You need to understand this. Doesn't mean it can't turn around. No, I hope it does, because I have a long on. I hope it goes like this. Then I make money on my reversion trade long, and then I still have my short on, right? So for my short that I have on, remember we talked about this inflection zone. This is why I draw. So I didn't just jump in when I saw it. I waited for it for a volume event. I got it right there. And this was the bottom of this balance, right? This is where it gapped down. But this at the time, this was directional conviction, buying tail, little tail here. So anyway, that's why I drew this at the time. That's why it comes all the way back here. I got my volume event in my important area. It proved bearish. I got short. So my short, to risk $400 on this trade, that's what I'm risking. But by the way, this is A plus. I should have put the 2 on here too. Damn it. So this is an A plus reversion, and it even shows it here. When you get these entries back into these prior events or just in front of them, as long as it stops outside, I should have put the 2 on here too. So this is 100% going to work now. So congratulations if you took the reversion trade, because I missed the trade. Anyway, when I took the short, there's my entry, there's my stop, there's my position size. I know if I'm wrong on that short, I lose $400. Here's my position sizing for my. I might get another chance to put this on. I'm going to. That's the entry for the 2 ATR. So the percentages for these two, you can see. So this is important that traders need to understand, because obviously it's better risk reward the further you go out. Right. So this is a moderator put this together. So the reversion trade is more of a scalp trade, but you can use it in conjunction to this stuff. So if you put on this is completely contrary to what trading rules tell you, right? For the 1 ATR that I put on, I'm risking 1.5 to make 1. That's not usually in trading terms a great. You have to be 60% winner just to break even, right? Well, I know from trading these for this long that it's at least a 70% trade. So I'm okay taking it. You got to take every one of them. It's not as appealing as the 2 ATR. Now the 2 ATR trade is risking 1 to make 1.4. You only have to be 42% trader. And the 3 ATR is risking 1 to make 1.2, 1.95. You only have to be 34%. Well, you'd be asking yourself, well, why are you? I told you this is going to work because I missed it. 100%.
Yeah.
You may be saying, why would you take the 1s and not take the 2s and 3s? Because I'm looking for the first reversion. So for instance, like if I was waiting for the 3-year, that's almost 2 to 1. Well, that's great, but guess what? It may not get there. And then here's your reversions all the way back, and I have nothing on, right? So that's why you got to decide, am I going to take the 1, the 2, and the 3? So my point is, you can see, you may only take reversions when they match like Tom's stuff, right? He said, this is the high volume node. This is going to be very upsetting because this should be a huge reversion trade. But you can say, all right, this is what Tom taught me. We're at the high volume node here of this balance area from this morning, this little dude, right? All right. Oh, here's the reversion for that volume event. All right, now I want to put it on because it matches, it's confluent with what Tom's talking about. I'm willing to give this a shot to come back to the zone. So you see how it's like you're scalping, but you're using the bigger picture stuff to put the trades on. And that's all I'm basically doing. This is upsetting. This is upsetting. I missed the straight. You see where I hover over it? So the reversion to long entry.
Well,
I told you
this
it's coming
thing
straight
stopped
back.
right where it had to stop.
I called it to the T because it happens to me every single time. And look, look at this. Look at this. Is this coincidence? Oh, no, sure not. Look what's turning up. There you go. What just moved $1 billion? That would be the hero indicator from spot gambling right there. It's driving everything, guys. It doesn't mean that the structure stuff doesn't work. It all works hand in hand. Really, really. I should have 2. And the thing is, I only put on 2 because I wanted to put on 2 lots. I wanted to put on this one, and each one of these is risking $400. So that's why I only put 2 on. So not only did I have full size on here, I should have 3. I missed it. I missed the 2 ATR trade, but that's okay. And the other thing too is you can say, I'm mainly a position trader, and I'm going to put on reversions when they're counter my position as kind of a hedge. And there's a way you can make both, right? So it's like I got short here, the Izzy. Then you say, okay, now that I'm short Izzy, I'm going to put on this reversion trade. Well, there's a way you can make money on both because you can get out of your reversion back to the zone, and then it comes back, and now you still have your short on. You see what I'm saying? So you can say I'm only trading reversion trades when I have a position trade on or whatever.
Well, see, what you're doing is part of what I'm doing in this prop shop gamification that I'm, and I have this math model that I'm building, but it's built around that. It's built around short over here, long over here, based on rotation and structure. And it gets to the point where you're going to have a good day in one of these accounts or another.
Right.
If you have enough accounts. No,
Right.
I'm serious. It's just a numbers game. I mean, it's really not what we're trying to show here, guys. And again, I'm off on a tangent, and this is a separate category. This is that prop shop stuff. But the prop, to me, the highest use of, if you're going to trade these prop shops, is to gamify it. Because if you're in there trying to be a responsible, prudent trader, it's not going to work. They force you to over leverage to get a payout. And it's just, it's brutal. But if you're trading one against another, you've always got something working. And then you can get different accounts to different levels. And then you can change your position sizing. So you're increasing your probabilities of not blowing up your accounts and getting the payout. But again, topic for another time.
Yeah, we can do. We can
But
start
that's
doing more
sort of
of
what
these.
you're doing with your accounts, Scott.
Yeah, kind of, but they're not really. I mean, I'm not counter trading them to try to make one or another. But yeah, I mean,
No. I get that. You're trying to make money
and they're
on
live. I
everything.
mean, yeah,
I get that.
I'm an Apex. I'm copying the
Well, I
vision
mean,
live,
I'm not trying. I'm not just coming in saying, okay, I'm going long here, short here, and I don't give a shit if I blow this one up. But that's
Right.
not what I'm doing.
All right.
I mean, most of the time I'll make money in 3 out of the 4 accounts I'm trading, if I'm trading 4 accounts during the day, because of rotation. Now, the days that I don't, it's when it's just relentlessly directional, like yesterday.
All right, so I got out of that one. That sucks because I should have the 2 and the 1 on. This was also back in black. So remember I was saying you can take them aggressively as it moves into the reversion. 1, there's the 2. This one bounced off X1. And here's another thing too. Remember, I just got done saying, well, this options flow trades like a market, right? You don't know when it's going to turn. Well, this gave you an indication. It was very like that. I'm even more mad now that I see this. Look what this bounced off. So that X1 was also confluent with the 0 day to expiration right there. So I could have taken the reversion off of that too. Like that's very, I just left like $600 on the table. But the point is, you see how this stuff is coming together, right? So this point of control in QQQ was also the high volume node of the 5-minute chart today, was also where the hero turned around, was also where that X1 was, right? So you see how this stuff works in together if you understand what you're looking at. That's exactly where that turned around, right? And that was the GEX one, the longer term GEX level. It bounced right off of that. Now you have yourself a real edge. When you know this stuff, you know this stuff, you know the 0 day to expiration game, you know that's the hero. It's like then stuff starts to make sense, right? I guarantee Tom's like his head's blown and he's gonna be like, oh my God, how have I been trading this long with all this stuff? Can you imagine your knowledge with knowing this stuff, what's really going on these shorter term moves? I mean, you're gonna be unstoppable if you actually ever listen to me.
Yeah, you sound like my wife, Scott.
Oh, that sound like your wife? Yeah. Tom contacted me, I think it was back in December, and I was begging him to learn this stuff. I'm like, Tom, I'm telling you, if you understand these areas, you're going to be lethal. And it's taken him this long to even come back around. So hopefully he's seeing real time how powerful this stuff is. So
Well, it's almost like my tennis game, Scott. I've done the same thing for so long. I'm not changing my grip now. You know what I mean? So
Right.
I'm going to have to learn how to change my grip.
Right. Well, but it's really not. It's not really changing your grip. I think it's
No, I know.
It's like
I
changing
get it.
like you're changing your ball, right, or your racket.
I totally get that. I totally understand. This is valuable information. That's
You
why
don't have to change a
we're
thing you're
doing
doing.
this.
You just have to demand when you're considered because you're always like, well, if this happens or this happens, then we're going to move. Well, this is going to help you to understand what's more likely going to happen, right? So you're saying we're at an inflection point, something big is going to happen here, but now you're like, okay, well, here's a volume event that proved bearish. Oh, we just broke through all those GEX levels. Now I know what's probably going to happen here. You see what I'm saying? So that's all you're doing is enhancing what you're doing. You're not changing anything, in my opinion. And as usual, nothing in the yes today. So it is what it is, right? It's like if it's not happening, there's nothing there. I mean, for me, if I'm not getting the stop iceberg information, I'm not trading the market. Right. There's plenty to do in NASDAQ and there's plenty to do in these other markets. So like here, just quickly, I don't know how long you want to stay on, Tom, it's up to you. But look at this.
Look, I'm good. We've been on here. There's a lot of information in here, Scott. Let me ask you, how long do you run your room during the day?
I just get on in the morning from about an hour and a half. I get on right about it's 8:20 Central till about 9:30, it depends if there's action. Then I do PM webinars too, but there's just nothing going on in the afternoon. So it's like I'm sitting here watching paint dry, so it's like
it can be.
I'll have them occasionally if it's warranted. But the afternoon, this is the worst afternoon trade I've ever seen in my career. Like there's just nothing happens. They used to call it the hour of power or the power hour.
Yeah.
Nothing. There's nothing happens anymore. So here you go.
Well, I'm in here 7 hours a day, and I'm not. I tell people this all the time. I'm never going to sit in front of a screen for 7 hours during the day and run a stream of consciousness commentary about every change in the bid ask. I think that's just nonsensical.
And I preach every day right now from 10:15. If there's one thing you take out of this webinar, this is it. To 12:30 Central, I have lost millions and millions and millions of dollars. I just lost last week. I lost like $6,000 just trading in this time period. It's like I can't help myself because this stuff's so powerful, right? So by the way, here's silver, here's reversion of silver. It's so powerful. I feel like I'm missing out. And with the zone drawing tool, I get notifications on my phone. So I'll literally leave my office so I don't trade. And then I get it on my phone. I'm like, oh crap, here's an event in NASDAQ. Now I got to trade it. But my point is, if you just leave at this time of day, you are going to, and especially mentally too, because most time nothing works, and you're just sitting here watching this, and you drain yourself. So when the trade does pick up, now you're brain dead anyway. So the best rule of thumb that I can give you from 10:15 to 12:30 Central, just get out of the office, go refresh, come back for the hour of power that's not there anymore. Occasionally it's there, but this time of day has been the death knell of me. I mean, millions of dollars I've lost.
Well, it's interesting you say that because, and I think that's where an understanding of market structure comes in and is really important. Now, the market has defined itself very nicely for us. It's basically the high of the day in this pivot low that came right to that elevator shaft. That's it. And we're going to chop and turn around in that area. Now we could marginally take out and make higher highs. But this market is pretty, we could also stay in this range for the next 3 hours.
Well,
between
and the other thing
today's high.
too, as far as thesis, that still hasn't gotten their fill. Trust me, these guys will get their fills. So does that mean you should hop out of a short? Not necessarily. You could, especially at this time of day. You say, you know what, I gave this. Remember, I'm still short my Izzy trade. My stop's up here, right? And it's above that liquidity too. So I still may be able to hang on where I don't get stopped out. But the point is, you can say, okay, I gave my short a shot. It held the GEX level. It held the real-time GEX level. Hero's turning up, and we have heavy resting liquidity up here. I gave the short a try. I'm out, right? I'll leave it on to there. Then I'll probably bitch. But the point is, this liquidity is it's almost 100% this is going to fill. Again, it could go down 300 points, then come back. But the big money will get what they want because they always get what they want. And again, I used to play the same game, so I know. So it's not a bad idea, especially as we come into this time of day where this is when the big time manipulation starts. You think the hero controls things now? Right now, this is what's going on. At that time of day, there is nothing in here to stop these guys, and they just load up the dealers and off. Away they go. Whatever way they push these dealers is where this market goes. You're watching it real time. Again, that's in the that's in that flip book, that spot gamma stuff that I showed you guys. All right, so that's in here. So use that for 50%. This is well worth. Both of these are well worth it, guys. You got to know this one's way more detailed. That you get the GEX levels from the and they got a lot of good stuff too. And actually, they're coming out with real time GEX levels for all the markets, like crude. So you're going to be able to see, I'm hoping, I'm praying, because you're going to know why those markets are doing what they're doing. They're going to have something like this for the other markets, right? So you'll have them for gold, crude. You will be amazed at how this stuff is running the show. And again, you're not learning anything new. You're using this to confirm the stuff that you already know, learning Tom's stuff.
Scott, this has been awesome, man. I cannot tell you. This is my head is hurting.
Well, you'll have
So
the recording.
I'm looking forward to. I'm gonna have to watch this about 10 times. Now, for my guys, those of you that are in here, I'm going to open the trade room up. Give me about 10 minutes for bathroom break and get another cup of coffee. And the rest of you, if the rest of you want to come into the room, it's a Zoom room. Just send me an email, tom@alexandertrading.com, and I'll shoot you the link, and you can come in and chill with us for the rest of the day. Scott, Bud, thank you so much. We got to do this again.
Yeah, we could, do it whenever you want, once a month, or if you want to, whatever you want to do, I'm game. Because again,
All right, we'll do it.
Well, everything I've learned
This is
structure
great.
wise was from you. So it's like everything works together. And I guarantee you get on a couple of these, you'll start to understand like what I'm doing. And I also do this obviously for my trade room every day. That's Pulcinitrader.com. And then tomorrow, every Thursday, I do it for bookmap. Same exact thing. I get in there at 9 a.m. Central. I'm in there for an hour and a half. So you can watch it on bookmap or come to my room. Again, I gave you guys this flip book. This is everything I use in my trading, right? The courses, my room. You need this stuff for bookmap. And then you get, again, I posted this in the Zoom. There's the tick strike I'm listening to and their YouTube channel and everything else. So you can get a hold of me. This is where Scott at Pulcinitrader.com. There's the Twitter or X, whatever it is now, YouTube. There's my story too, my backstory. But yeah, I mean, again, it all started with Tom. When I came back when I got, when I was about to go down, when scalping didn't work anymore, Tom taught me all about structure. I still couldn't make money because again, I didn't have this stuff. And once I got this, then I was like, okay, I'm back. So this has been great. I'm just glad to team up with you again, and let's do it again soon. And I'll send out an email with the recording, and I'll give it to Tom, and he can send it to his community as well.
Great, Scott. Have a great day. See you guys. And again, if you want to come into the room, email me, tom@alexandertrading.com. I'll send you the link.
Thanks,
Later,
guys.
Scott. Thank you, sir.
See ya. Thank you.